Doesn't make me sad. Good morning, Paul W., Jeffrey, Chef, Rob, Pete, Steve, all you cool kids. Nice to see you. Excuse me. How was everybody's weekend? Have a good one, I hope. Lots of fun. Doing those things that you do, smiling lots, studying, taking pictures, finding patterns. Good. I like hearing that. Had an awesome weekend. We had friends of the family in. They have a 5-year-old and a 4-year-old. Man, when your kids are grown-ups and somebody throws a couple little kids at you, whew, it's exhausting. I slept great last night. Good morning, Muser. You guys ready? Let's do this. Let's have some fun. So everything's patterns, and that's what we're going to do today, and it's kind of cool. We're going to keep it simple. We're going to go through 101. We're going to talk about things that happen. Other people's kids. Amen, Steve. I knew right what you meant. I must have said other people's kids 10 times this weekend. It's fun, though. It's so much fun. When they come in just for the weekend, man, we had pillow fights and hung them up by their ankles and threw them downstairs and held them underwater, and not really. But it was fun. A lot of sugar, a lot of fun. With their parents on the couch going, oh, stop, stop, stop. I'm like, go see a movie. I got these kids. I can do this for 2 days straight. Guys, forexfactory.com. This is putting you in the know. What's going on in the wonderful world of news, right? Is there something coming that could potentially move the market, make it spike, make it jump? I check this every morning, guys. At 3 a.m., I don't know why FOMC member Waller was speaking at 3 a.m., but they were. Looks like FOMC people have a lot to say. So at 2 o'clock, it's low impact, but there will be a little announcement. I check this every morning, guys. I look for low impact and high impact. Medium and high impact. Red and orange boxes. And all it does is it gives me a little heads up. Hey, somebody's going to say something that could make somebody with some money change direction. So I don't really want to be in the way. And I do that every morning, guys. And then we're going to talk about the same stuff that we talk about first hour, every hour. I'm going to go through. It's been a pretty slow morning. It looks like it has been as far as markets go. I was watching the NASDAQ this morning. Took a loser, took a winner. So, hey, good morning, Adriana. So maybe it'll be better in the afternoon. I do have my S&P charts coming up. I got crude oil up for you guys. We will watch the live market if able. Got a message this weekend that said, hey, Mark, can we do more in the live? Guys, if there's time, I promise you, we will. It's kind of like watching one of those ghost hunter shows some days, though, right? Where they're like, oh, we think it's haunted, and let's take a look, and they never actually see anything. Good morning, Kenan. So watching the market doesn't guarantee that we're going to have a setup, but I will watch it because I think it's fun. And I'll go back and forth because I think this is something that we can do is when we're going through chart reads, instead of just going chart to chart to chart to chart, maybe what we'll do is we'll pause every now and then and we'll take a look at the live market and we'll do that chart read to see what's going on, right? Doesn't mean that the rules are met, but at least we can go through and we can apply these things that we're talking about in the morning. So Cheetah, thank you for that. You guys don't realize it. Every time you send me a message and request something, sometimes the answer's no, right? I still behave like a parent, but sometimes it sets us up for a better classroom. So we'll see what happens today. Guys, everything comes from the trading guide. I wish I could say that there were secrets, right? I'd love to charge you guys a lot of money for the super secret handshake stuff, but there just isn't any. Everything that you need, I'm going to give you today, guys. I promise. Everything that you need, you're going to get within this first hour, and then you're just going to have to study it and get good at it. And there's terms that you're going to have to learn, right? So glossary of common terms. If I say one-to-ones, you have to know what a one-to-one is. By the end of the day, you'll know. So don't be afraid to go through and click on all these and see what they are. But the one that we're going to focus on this morning, guys, is that high probability trade, that high probability trend trade, actually. And this is a trade that typically wins 70 to 80% of the time, guys. This is the one that'll bore the ever-loving snot out of you, waiting for it to happen, if you're an adrenaline junkie. But this is the trade that's going to teach you to read your indicators, that's going to give you the ability to look at your large chart and your small chart and know whether or not you have a rules-based trade. The rules that we're going to talk about this morning, guys, are really pretty simple. It's only 3 rules, but they're all going to agree on every chart for the high probability trend trade. And it's going to set you up for what you're looking for. But these rules, this high probability trend trade, is going to turn you into a chart reader. And this is my goal for you guys. And I really push this every day. And I want you guys to believe it. Chart reading is 90% of your day. Chart reading is what you're going to do when you're not trading. Chart reading is going to let you know that your rules are met. And guys, your rules create a statistical advantage. Your rules are nothing more than patterns that have been proven to win more than they lose. They repeat themselves every day, every market. And once you learn these very basic rules, once you get these rules down that kind of give you that ability to know what's happening through your charts, you're going to find a lot more opportunities. So keep it simple in the beginning. And we're going to focus on this high probability trend trade. And let me pull up some pictures here. We're going to talk about 3 rules on 2 charts. And before I go to the 2 charts and what they do, this picture is a great visual of why we're using 2 charts. There's a large chart and a small chart, guys. And your large chart is what everybody that moves the market wants to have happen. The large chart is going to define the direction of the market. The large chart is going to define the areas that can be problematic. The large chart is really going to give you everything that you need to look for an entry, guys. This is the large crowd. These are the people that move the market. These are the people that are definitely not us. And then there's always a small crowd. And we like to believe that we're at least a part of the small crowd, but we're not, guys. This small crowd is even just way overfunded compared to us. And they create these little fights. And we're going to take advantage of the large crowd by going and doing what they do. Very much like a remora hanging on a shark. And then we're going to let these small crowds fight. But the cool thing is they're going to get us back to our perfect entry, guys. And we're going to use 2 charts. Large chart, small chart. Large crowd, small crowd. Large chart gives you everything that you need. First 2 rules met to look for an entry. Small chart's going to refine that entry. You will be able to pinpoint exactly where the market is most likely to continue. And you're going to do it with only 3 rules, guys. 3 rules. That's it. Simplicity is my battle cry. The less you have to think about, the easier it is to find things, to be honest with you. The less distractions, the more focused you are on advantages. So don't be afraid as a brand new user to really keep it simple. The high probability trend trade is 3 rules. Each rule creates an advantage. It's the 3 advantages that create a trade for the brand new user. So your large crowd is going to define the momentum of the market. That's rule number 1, making sure that you have strong triggers on the large chart. Your large chart is going to define the areas where the people who are actually in charge of the market are going to react and make decisions. When they are not at one of those areas, when termination conditions are false, you will have a clear path, which means that you are going to have this rocket-fueled giddy-up in a direction with nothing in the way. And once you have that, we're just going to define an entry area, guys. Same thing I do literally every day. I don't change it because I don't think it needs changing. I don't change it because the reality is this is how you're going to get to where you want to be the absolute fastest, guys, by keeping it simple, by keeping it focused. And then there's 2 things that you need to do. So I'm going to do my part. I'm going to teach you the rules for when it's okay to trade. That's going to be my whole MO is teaching you the rules. You guys need to post in the room. You need to post your trades. You need to post your chart reads. You need to post your questions. And I want to show you something right now. The people that do this right here. So Cheetah, gold star for you today. Let's see if we can open that up. Cheetah said, you know what, Mark? There's a concept that I'm working on. And let's see if it'll actually come up. The concept is strong tops and bottoms. So he literally put a circle around what he was curious about. He typed onto the chart and said, Mark, Is this a bottom? Both triggers pierce the fib support. So every time you ask this question, you're going to get an answer, and we're going to talk about it, and we're going to explore exactly what it means to have a strong top and bottom. And what happens is we create these much better lessons each and every day. And Cheetah, we're going to cover this one when we talk about it, but I actually posted a picture and then secondary picture in the room to make sure that you get the answers that you need. So guys, post in the room. I can't stress that enough. Post in the room and ask your questions. Show me your trades. Get that feedback. 15 hours every week, I'm live, and my only goal is to give you the feedback that you need so that you can get to where you want to be. When you post in the room, let me pull this up. How to annotate your charts, guys, for the absolute best feedback. More than anything, tell me what your chart read is. Tell me why you did what you did. Tell me what you saw. And if you use the language of the rules, if you use the idea of momentum and you define it and point it out on the chart, if you always circle back to whether or not you had a clear path, and then when you're taking entries, if you're telling me exactly where you're taking it and why and where you're exiting, what you're doing is you're giving me everything that I need to give you the absolute best feedback. And what happens is you'll begin to recognize patterns in the market that are bringing you success. You'll begin to recognize patterns in the market that are taking that success from you. So I encourage you guys, every time you annotate a chart, go back to the very simple, whether it's a high probability trend trade or not. Go back and define momentum and clear paths, and what you'll find is that there's this huge correlation between success and having the two of those. So you're going to post in the room, but you're also going to use the spreadsheet that Nexgen provides you. I give you guys this spreadsheet every day. This is my version of it. I do a lot of work on it. Every day I add something to it. I don't think I've ever closed the spreadsheet out and not had to hit save, whether I'm adding pictures, of trades, of management things, of patterns that repeat themselves. And this client trades page, guys, this is 350 pictures of you guys doing great things. And this is the entries for high probability trend trades and management, very basic mechanical management. And then I've also got probably 25 pictures of how to manage even more from beyond that point. Patterns that repeat themselves, termination conditions. And when you go to the first tab, my poor computer is struggling again. This is where you are going to post all your trades, guys. Every time you take a trade, this first tab is your trade journal. And there's 2 links on how to paste your pictures in here. But you're going to post your trades, you're going to talk about how you felt, the advantages that were present, and then there's a giant note section for the feedback. And what you'll find is no matter what you post in the room, I'm going to go back to momentum, clear path, and entry. I'm always going to resort back to that, no matter what kind of trade it is, because that's the foundation of everything that happens in the market, really. What was the momentum like? What was the clear path? Or was there not a clear path? Because when you start talking in terms of advantages, guys, you start knowing what you're getting into. So fill this out, but don't just fill it out. Go back every morning and study it. So whatever you did on Friday, you should look at this morning and you should say, all right, what worked? What worked for you guys on Friday? For me, it was momentum and a clear path. Crazy, right? What didn't work? Well, maybe I traded into a termination condition. Maybe I didn't have the momentum that I needed. If I go back and study this every morning, what I'm doing is I'm just saying to myself, hey, look out for these things that are causing trouble and focus on these things that are bringing success. And that feedback that I give every day is going to get you focused as well. And then, guys, the most annoying thing about me, ask my wife, is that I don't forget things. And I begin to recognize patterns. So if you post in my room this week 10 times, 10 trades, by the end of the week, we're going to define your thing. If you have a challenge, maybe that's keeping you from taking trades, that's getting you in too early, making you hold too long, removing success, by 10 trades in the market, guys, I'm going to see it, we're going to talk about it, we're going to work together to fix it. So use that spreadsheet, study, start recognizing those patterns. As you learn the high probability trend trade, there's an entire page dedicated to the rules. And then this favorite looks is where you're going to build your trading plan. Don't be shy there, guys. Every time your rules are met, get a picture in there. So post your trades, guys, track in the spreadsheet. I'm going to talk about the rules. I'm going to give you everything you need, what they look like, what they mean, how to study them. You need to simulate and practice and make mistakes, guys. Trade into termination conditions, but then go back and talk about that you traded into them, and you'll be less likely to do it. Post your pictures in the class until you're sure you have the correct rules, until you're sure that you can follow your rules. Because remember, your rules create an advantage, guys. Your rules aren't gut feelings. Your rules are patterns that have been proven to repeat themselves, that have been proven to win more than they lose. And your rules, they're going to make these trades easier to take. So don't practice the wrong rules. Focus on finding success from day one. We're going to simplify. We're going to talk about a high probability trend trade. You have to know what it looks like. What's it going to look like to commit to it? That's what we're going to spend this first hour doing, guys, is really breaking down the individual pieces to make sure that you can put them together for a trade. But you've got to learn the looks so that they become easy. The more pictures you take, the more charts you annotate, the more time you spend looking for the advantages rather than the trades, guys, it's almost going to slow the market down. It's going to become real easy to get to where you want to be. So we're going to keep it simple and focused, guys. We're going to look at two charts, large chart, small chart. We're going to talk about, on the large chart, the direction of the market, the momentum of the market, and the areas on the market. This is rules 1 and 2 will be done. 66% of your advantages are in place before you ever look for that high probability trend trade entry. And then once we have them, we're going to let that small crowd do their thing, and we're going to refine the most current bar from the large chart, and you guys will be able to pinpoint where the market is most likely to continue. This is going to reduce risk, increase profit potential. That's where rule number 3 comes in. So large chart must have strong triggers. That's going to be your advantage of momentum, guys. Momentum is universal. Whether it is a range chart, a Renko bar chart, whether it's a large chart, small chart, doesn't matter. Momentum is the exact same look, always, on every chart. So with, probably 12 minutes of study, you're never going to wonder if momentum is present on the chart you're looking at. Termination conditions are very much a large chart thing. They're the lines where the people in control make decisions, guys. And we're going to be able to identify it, and you will know if the termination conditions are false, which is going to give you room to your profit targets, which is going to give you that clear path that we're looking for to go find an entry. And then rule number 3 is really going to define the point where the market is most likely to continue for the high probability trend trade. That's what we're focused on, guys. Give it like 20 trading days of finding that high probability trend trade entry, and it's going to open 1,000 doors for you to see more opportunities in the market. So rule number 1, strong triggers. The only way I can have strong triggers on my large chart is if I'm going with the trend, guys. So direction is defined by the background color. If the background is green, then the market's going up, and you should be looking for rules to be met for high probability trend trades long. And if the background is red, the market is going down, and you should be looking for rules to be met for high probability trend trade short. Notice that I don't say you should be looking for long trades. You should be looking for short trades. You should be looking for the rules to be met for your long trades and your short trades, because that's where your advantage comes in. So when the market's going up, when the background is green, both your small triggers, these solid lines, and the large triggers, the dashed lines, these have to be green too. If they're not, you don't have strong triggers, guys. If the large are green and the small are red, that little conflict of interest there, you do not have strong triggers. If the large are red and the small are green, can't happen. So we're looking for agreement in trigger color to the background. And then when the small triggers are up and above the large triggers, when the large triggers are widening, this is key. Flat triggers got no boogie, somebody said once. This is when the odds are favorable for the market to continue up. This is my strong trigger look, the space between the two. It looks like scissors opening, ready to cut. When I have strong triggers up, or when I have that same look the other direction, strong triggers down, smalls below the large, larger wide, space between the two, guys, this is the best of the best time to sell Fibonacci resistance on a smaller, faster chart, or to sell Fibonacci support on a smaller, faster chart. It looks like a tail or a wick on the large chart, because we're using that refinement process. The information that you guys are going to get, whoops, I closed out my picture. The information that you guys are going to get on one chart, on that large chart, happens in that one bar. Just one simple, big, slow-moving freight train of a bar. It's the refinement process on the smaller, faster chart. The entire pullback to the area where the market is most likely to continue. This is where the tops of these tails are most likely to form. You will be able to pinpoint where the tail is most likely to form, but you're going to do it on a smaller, faster chart. So you're going to see these and you'll be able to study those later. But strong triggers, guys, strong triggers lead the way. Strong triggers create a market that's likely to continue in the direction of the trend. Strong triggers give an awesome push. This is the S&P from today. That separation between the small and the large lets me know that it's likely to continue up. You're going to find these opportunities for long trades or for short trades when that momentum is the absolute fastest. Good morning, Gary. And you're going to be able to do it on the most current bar. So let me ask you guys right now. My background is red. My small triggers are red and my large triggers are red. There's space between the smalls and the large. Can everyone give me a Y if you recognize that this is actually odds favorable momentum? This is that strong trigger look. You guys see it? Most current bar. That's only 1/3 of the equation though. But guys, that's your look. Start taking pictures, start committing it to memory, and what you're going to be able to do is never miss that advantage of momentum. And small triggers work their way back inside of the large triggers, guys. When they do, this is a weakening of the large triggers. This is what we call anything can happen triggers, because instead of the odds being favorable, anything can happen up or down when I weaken those large triggers. So you're going to be able to commit this look to memory, guys. You're going to be able to go back, and I want you to use your spreadsheet, and I want you to go to the one-on-one section. I want you to start taking pictures of that strong trigger look and annotating them. These are strong. There's separation. This is my advantage of momentum. This is amazing. Rule number 1, and fill it up, and you'll never miss strong triggers. The same is true on weak triggers. I'll never get suckered into those anything can happen triggers if I know exactly what they look like. So there's really only 2 options for the new user. You either have the best of the best, let's look for our rules to be met, or you've got that, man, let's sit on our hands and do nothing, my advantage of momentum is gone. Anything can happen triggers, guys. These usually precede reversals, deeper pushes, untradeable bounces. So it's kind of this, I don't know, I guess a timeline of momentum. When the scissors are wide open, when there's separation, you guys are going to sell Fibonacci resistance on a smaller, faster chart. This is the best of the best. Remember that we're becoming chart readers, guys. We're not becoming day traders, we're becoming chart readers. And our chart reading is going to take us to becoming day traders. So as that momentum starts to slow a little bit, one of the lines of the small get inside of the large, you're going to use your chart reading to understand if everything else agrees, and maybe you'll find opportunities to take short trades. And even with those anything can happen triggers, when you get good at reading your information in a moment, you might be able to still take short trades, find some opportunities, manage them aggressively. But what you're going to know through the repetition, through the study, through all the pictures, is that when weak triggers hit one of these areas, guys, this is when, oh my gosh, this is when markets reverse. This is when trends change. This is when the people who make the decisions are likely to exit their positions and the other people are likely to enter. So for the brand new user, odds favorable momentum, it pushes that market. It can break key Fibonacci areas. It'll even cover some of the mistakes that you guys make. And then as you grow, know that there will be more opportunities, but let's get really good at the best of the best, at the highest probability scenarios first. And what you'll find is, let's just go take a look. Weak triggers, right at an area. Look at the bounce. Weak triggers, right at an area. Look at the bounce. So let's build a little trust. The triggers weaken, it's right in an area that precedes the reversal. Kind of cool. Look how these lines stop the market. Pretty outstanding, right? That's our segue, guys. This is how I get you to rule number 2. Making sure that you can define termination conditions. Making sure that you understand when the market reaches someplace that may stop the market. And the areas, let's see if I can get this picture open. Boom, 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 boom. The areas that we're looking for, guys, on a large chart that can create problems, I wanted to give you the picture of it. This is a good one just to drop into your spreadsheet. If you're brand new with me, this is kind of a roadmap of what we're looking for. Termination conditions, guys, when they're not present, when they're false, you're going to have room to your profit targets. You're going to have a clear path. The areas that are considered termination conditions, guys, they're Fibonacci-based indicators that may reverse the market. And this is based on a comparison of the Fibonacci area and those T3 trigger lines. The same trigger lines that establish momentum are going to let you know some pretty key concepts, guys. They're going to let you know if these areas are likely to stop the market. They're going to let you know if these areas have the potential to break. And they're also going to let you know if these areas are broken, if there's no trouble in the way anymore. And all of this happens with a simple comparison between the trigger lines and these areas. Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, cyan divergence lows, and magenta divergence highs, guys. And the recipe is going to remain constant every time you look for a termination condition. It starts with price must reach the area. Your dynamic Renko bars on the large chart have to trade down and reach an area. I've highlighted it here, support. So when price reaches support, the only thing I need you guys to do is say, where are my triggers? I wish I could make it more complicated for you, but I really can't. Price reaches support, where are my triggers? If my trigger lines remain above support, this is an area that may stop the market. This is what we call a termination condition. This says to you in the loudest voice possible, no more short trades. Somebody might make a decision to reverse the market. And the reality is you just don't know. You don't know what it's going to be. So your statistical advantage, your advantage of a clear path is gone 100%. And you just have to say to yourself, no short trades. This isn't my best of the best. The area is considered broken when the small triggers and the large triggers get south of support or north of resistance, guys. And when the triggers break through the area, you'll notice that support begins to behave as resistance, or resistance will begin to behave as support. But that path is clear until you reach the next area. And this is that clear path. This is rule number 2 being met. So if you're brand new, you're going to have two options, guys. Either the market is directly into a termination condition, price reaches resistance, absolutely no triggers break, no long trades, thank goodness, it keeps you safe. Price reaches a divergence low, the triggers can't get below it. Check it out. Look at the bounce. Guys, what a great lesson. Right into resistance, all the triggers are below. Guys, this sets off a huge reversal that takes you all the way down to these yellow 1-to-1s, the triggers remain above, and sure enough, off it goes. There is support holding again, guys. There's support holding again. It's pretty outstanding just how accurate the fibs are. Is everybody with me? Price reaches, no triggers, no trade. Price reaches support, triggers don't break, no trade. It's almost too easy. Price reaches Fibonacci support, even with momentum. Does everybody see what the market's doing right now currently in the most current bar? If you were hoping support was just going to get out of the way and give you a short trade, guys, it's bouncing, and it's bouncing kind of ugly. So price reaches, no triggers, no trade. Both triggers break. The path is clear. Let's look for our rules to be met for entry. And then we're going to get into a medium probability scenario, guys. High probability means that every indicator on every chart agrees. Medium probability means that most of your indicators agree, however, a small issue exists. This is going to be your first medium probability scenario, guys, and this is when the small triggers absolutely smash through an area with odds favorable momentum, but the large triggers haven't made it yet. This momentum, this trigger look says that this area has the potential to break. But until the large triggers make it through, it's just potential, which means that it could never be a high probability trend trade. But the cool thing is I'm going to hand you a plan that's going to allow you to take advantage of that potential entry right there. And it's going to revolve around making sure the advantages of momentum are present, because it's not a clear path. Making sure that your entry is clear and concise, because it's not a clear path. This is going to be your second trade, ladies and gentlemen, and you're going to find a lot of them. So I am going to hand you a very solid way to take it. But let's review one more time. Price reaches an area here, guys. Yellow 1-to-1s. None of the triggers break. All of them are above. And there's not one person in this room that has to give away money unnecessarily into this area because your rules say no short trades. You're going to have that little devil on your shoulder going, man, Morgan, you haven't been paid all the way down. It owes you. Troy, dude, they smashed right through support and didn't give you an entry. The market owes you. Guys, the market owes you nothing. And the market loves to chew you up and spit you out because for every one of you that went short here, you got the other side of the guys making money off the bounce. So price reaches, no trades, guys. And then it pushes all the way up to resistance, that untradeable bounce. And all the triggers remain below, so you really can't go long if you're following rules. And then your trigger lines are different colors, which means that you'll never have momentum, which means if you're following rules, there's no long or short. And then smalls are above and the large are below and the path isn't clear. And you smack into this mid band and your large triggers are a full bar away, which means the mid band might hold too. And guys, this is about an hour of you doing absolutely nothing. This is an hour of you sitting on your hands and just saying to yourself, I wish I had momentum and a clear path so I could find an entry area. And then the skies open up and the angels sing, and sure enough, smalls and large get above resistance and the path is clear. And the smalls are outside of the large and the momentum is present. And each and every one of you, with a couple weeks of really solid study, will never miss this potential entry for the highest probability trend trade and carry that momentum all the way up to resistance. It's what you don't do here that's going to let you keep the money that you make here. Does that make sense, everybody? This is your 90%. 90% is doing nothing. 10% is capitalizing, having a statistical advantage, and understanding when you got to get into the market because everything is right. And that's what this represents. There's one of those 50-50s. There's going to be times where this becomes your trade as well, that potential to break. I'm going to give you a solid plan. But I need a why in the room, if you guys don't mind. One more time. Price reaches Fibonacci support. All the triggers remain above. Guys, it still hasn't made it through. Big red flag. Lines on the large chart are where decisions are made. Lines on the large chart are where the large crowd, guys, the people that have all the money, the people that make the decisions, they're making them right there. Small crowd's an entry chart, guys. Small chart's an entry chart, but sometimes your large chart is going to turn from nowhere. And you're going to say something like, man, it didn't hit an area, how come it went up? Or you might even say, look at that, there's odds favorable momentum and a clear path, and it just dropped like a ton of bricks. There's one termination condition, ladies and gentlemen, that you will see on that smaller, faster refinement chart before you ever see it on the large chart. And it's going to help you identify change that you're not going to see on that big chart because it's so slow. And that is 3 divergences in the same price range. So 3 divergences, 3 losses of momentum, 3 cyan lines from a low, 3 magenta lines from a high. Guys, you see these printing off of the pivots? These may reverse the market. They become more powerful when you take that rule number 1 look, that anything can happen triggers. These 3 divergences become more powerful. It's more powerful still if it creates a little head and shoulders pattern. If that third pivot is higher than the second or lower than the second. Guys, this is the look. The only time on a small chart where I say to myself, egads and little fishes, I don't have a clear path. Rule number 2 isn't met. I can't take that short trade. I can't take that long trade because 3 divergences printed on the small chart. This faster chart is going to let you see from a low or from a high what you can't see on that slower chart, that slower moving chart, guys. This looks like you've got nothing but clear skies to the next area. Your smaller chart's going to identify. So guys, that's it for termination conditions. So your large chart says that you're going up or down. Your large chart says that you have the advantage of momentum. Your large chart is going to let you know that you have a clear path. When rules 1 and 2 are met, we're going to turn our attention to that smaller, faster chart. We're going to let the small crowd do their thing, guys. Everything says up, the momentum is strong, the path is clear, And then these guys decide to make it go down a little bit. That's okay. The small crowd loses 70 to 80% of the time. The small crowd creates small retracements, and you guys are going to be able to absolutely pinpoint where the market is most likely to continue using that smaller, faster chart. So rule number 3 is going to allow you to use a limit order to buy or sell a pullback. That pullback is the little fight from the small crowd. And you're going to do it at areas, fibs, mid-bands, yellow 1-to-1s. But the key is you want those areas to be inside of triggers. So this is the most wordy of the 3 rules. I'm going to be so precise and so good at picking out where the market is most likely to continue that I'm going to wait for the market to come to me with a limit order. Lines on the large chart were problematic. Lines on the small chart give me something to bounce off of. So I'm going to have that limit order waiting at an area. Fibs, mid-bands, yellow 1-to-1s. And then I'm going to insist that that area is inside of triggers. Because guys, triggers are these moving averages, and price tends to pull back to trigger lines. So what we've done to really create the precision, guys, is we've taken the large chart, large triggers. See how price pulls away and pulls back to the large triggers. Price pulls away and pulls back to the large triggers. So I'm taking large chart, large triggers, and I'm actually putting them on the small chart. And when the small chart, large triggers and the large chart, large triggers overlap, we're going to call that favorable large triggers. And when I've got areas inside of those triggers, guys, I'm going to pinpoint exactly where the market is most likely to continue. So you're going to see 2 sets of triggers on your small chart, the large and what we call the synthetic. The synthetic are the large triggers from the large chart. I expect price to return to the large triggers. It's a correction. That's all it is. I expect these price bars to come back and hit the large triggers, but I don't expect large triggers to stop them. This is why I insist that there's areas inside of the large triggers, guys. These areas are a bounce point. I'm kicking a soccer ball as hard as I can, and this represents the wall that I expect it to bounce off of. So when they're overlapping, when those correction points are one on top of the other, guys, this is what we call favorable large triggers. You will have the least amount of risk going into trade. You will be able to pinpoint with amazing accuracy your entry. And the further apart those correction points split, the more indecision it creates, because you don't know if it's going to go to the small chart large triggers or the large chart large triggers, and it creates this indecision, and it's going to increase your risk, and it's going to decrease accuracy. So for the brand new users, as you're gaining reps, let's look for those favorable large triggers, and let's go ahead and define the entry. The reversal bar begins the pullback. This is the fight from the small crowd, guys. This reversal bar says, hey, the small crowd's doing their thing. And the reversal bar is not the entry for the high probability trend trade. The reversal bar is not where you're going to hit buy now. The reversal bar says, hey, let's look for those triggers, large and synthetic. Are they overlapping? Are they one on top of the other? Draw a box from the highest line to the lowest line. And this lets you know where you're going to look for those areas. So the next step is, once you find your trigger lines, is look for fibs, mid-bands, and yellow 1-to-1s inside of those favorable large triggers. From the highest point of support to the lowest point of support, guys, this blue box, that blue box represents where the market is most likely to continue. This blue box is the highest probability trend trade that you can take. This blue box is where I expect the bounce, either from the top or the bottom. The reality is I don't know. But because the large chart has momentum and absolutely nothing in the way, you will activate a limit order 2 ticks above that highest point of support. And you're going to say, come get me, small crowd, because 70 to 80% of the time, these guys fail, and the market bounces right off that line inside of triggers and heads off to the promised land. So in a short trade, it's the exact same thing. We wait for the reversal bar. And at the time of the reversal bar, we're not entering the market. We're identifying favorable large triggers. And if it gets to the large triggers, guys, we're not entering at the large triggers. We're waiting for the areas inside, fibs, mid-bands, yellow 1-to-1s. And if there's only one line, a mid-band, guys, there's one spot where the market is most likely to continue. The only thing you have to do is drop a limit order a couple ticks below it. See if the small crowd can get you there. And if they do, you're on your way in that highest probability trend trade. These guys are going to fail 70 to 80% of the time. It's not the reversal bar that gets us in. The reversal bar starts the process of finding your areas. It's not the impact on the triggers, because the triggers are just a correction point. That's just math. We're going to use that limit order to get you in there. So, entries on the high probability trend trade, guys. We're not trading tails. When there's momentum in a clear path, a limit order just above areas inside of favorable large triggers. If you go back and study a little bit and you circle these tails with odds favorable momentum and they line up with areas, guys, this is your high probability trend trade. This is the look that you're learning so that you never miss it. This is going to give you the least amount of risk. This is going to give you the highest profit potential. And if you take 20 days to study this, guys, ask a million questions, take 1,000 pictures, you're going to understand not only where the market is most likely to continue, but you're also going to understand where the market shouldn't go. And where the market shouldn't go is beyond that window of opportunity, is beyond that correction point, those triggers. And this is going to become your first stop. So defining entries is the first step in creating your management plan. I expect it to bounce from here, so if it goes beyond there, if it's one of that 20 to 30%, guys, I have a stop waiting to minimize my losses. Same thing over here. But with all those advantages, you're more likely to get a reversal bar in the direction of your trend. That's kind of the second piece of the management, guys. You can reduce risk a couple ticks above, a couple ticks below, and all of you brilliant Nexgen people, it's not unlikely to see you take the absolute best entries. Give me 1 second, Chef. If I take the order right here and I get a reversal bar, guys, and this one still fails, I'm out 30 or 40 bucks. Not 200 to 300, guys. Great entries create very manageable trades. When I say favorable large triggers, can you clear up if you mean synthetic or the one-to-ones or the ones on the smaller chart? So, Chef, great question. When I say favorable large triggers, do I mean synthetic? I'm just going to reiterate so everyone can hear it. Do I mean synthetic, or do I mean the large on the small chart? Well, Chef, in order for them to be favorable, when I say favorable large triggers, and here we go, I wrote a little thing on it here, so I'm going to drop this in the room as well while that opens up. When I say favorable large triggers, that's not the one I wanted to share. Okay, hold on. Dun, dun, dun. Entry options. This is the one that I wanted to share. Let me bring this up real quick. And I will close out that one. There we go. So the entry chart, and Chef, thank you for the question. The entry chart is the defining point, guys. This is where you're going to define your entry. But the large triggers are moving averages. And I expect price to come back to the moving average. Does that make sense? Because guys, this is the first thing, is we expect price to correct. The large triggers on the large chart are the correction point for the large chart. The large triggers on the small chart are the correction point for the small chart. Is everybody good with that? So what we did, and what creates favorable, Chef, isn't one or the other, but rather the overlapping. Because what does this do? This puts my large chart correction spot and my small chart correction spot in the exact same location. So I call it favorable. Why is it favorable? Because there's less room for there to be areas, but it's the exact same range. I put a box on the small chart large and a circle on the large. Notice how they overlap? I'm expecting price to come to the exact same place. That is definitely favorable. That's a huge advantage. Both charts are giving me the same correction point. And when there's areas inside of that doubled up correction point, man, there's only one spot for a bounce. And then, Chef, when they start to split, right? When they start to separate, when that correction point, one is way down here and one is way up there, it creates this enormous amount of indecision. Well, I don't know if it's going to go to my small crowd or my small chart correction or my large chart correction, which means that I have less accuracy, which means that it's harder to pinpoint, which means that if my stop has to go beyond the correction point, if I get in down here, my only logical stop is way up here, and it increases risk dramatically. So Chef, it's not really the large chart. Good morning, Chris. It's not the synthetics or the small chart large triggers. Favorable is what happens when they overlap. So let's see if we can find an example. Let me pull up my S&P. I will do it on both and see if we can't get the bows. The light bulb just went off. I love it. So just for grin, Chef, let's check this out right here. I'm going to circle this one right here, and I know that it's going into a termination condition, but I'm just kind of hoping for a little love on the small chart. So I'm going to find that circle. And there's actually two potential pullbacks here. Here the large triggers and the synthetic triggers are one on top of the other. So my only areas inside are right here. Does that make sense? I know that it's either going to go to the large triggers or the synthetic triggers. I don't know which. I don't care. Doesn't matter to me. But when they're one on top of the other, there's the least amount of space for areas. Up here, the large triggers are a little higher, the synthetics are still there, but there's only one spot with lines. So the tighter these are, the easier it is to pinpoint. And then look what happens when they start to split and they start to spread and they don't agree. Here I had a correction point, and here I had a correction point, and it went all the way to the top of this one. And it blew right through this one. And then when the reversal bars happen inside of one, the more distance between the large and the synthetic, this is a good example. It becomes harder to pinpoint exactly where the market is most likely to continue. But the tighter they are on top of one another, notice how the market bounced right back off of the two of them together. That's your favorable large triggers. Favorable large triggers give you the opportunity to have one correction point. And then when there's lines inside of it, well, I'm not going to say safer. I hate that word safer, because then people say, damn it, I had favorable large triggers. How come it lost? Because sometimes trades lose. But what it does, Chef, is it increases accuracy. How's that? Because if there's only one correction point because they're overlapping, I'm a big fan of language, you know that. If there's only one potential correction point, get over here, because they're overlapping, it's the smallest window of opportunity. It's the least amount of risk. And if that feels safer, then absolutely. But there's only two lines inside of these favorable large triggers. If my synthetics were way down here, that window would grow exponentially. Does that make sense? So the tighter they are on top of each other, the least amount of risk. And as you grow, Chef, as you develop a trading plan, you'll start to say, well, I know they're split, but because of all these advantages, maybe I'll look for a better entry. But until you get those reps, there's a couple things that are important. Don't trade in determination conditions. Look at the reaction, right? Twice. There's a fight going on here. Termination conditions went all day long. Strong triggers can break them, right? But you got to let the small triggers get through first, and then that agreement. So great question. Absolutely great question. And then I wanted to say, first I want to ask, are there any questions about the high probability trend trade? You're welcome, Chef. Thanks for asking the question. That's all you guys have to do is ask the question. Once you do, I'm going to find you the answers that you need. That's my job. That's what I love doing. So I wanted to go back and I want to revisit termination conditions real quick. And I want to talk about the idea of strong tops and bottoms, guys, because you're going to hear that in class. And on this plan I'm about to give you, it's going to say, is the market coming from a strong top or bottom, guys? A strong top or bottom is a no triggers through termination that reverses the market. And the reason these are so powerful is because decisions are made at these key areas, guys. And if price reaches them and the triggers can't even break them, I don't use hotkeys, Morgan. I'm not that smart. I hit the wrong keys. I stay 100% in control visually of everything that I do in the market. I don't like hotkeys. I don't like automated trailing stops. I like to be in control. That's just me. Some people do great with them. Strong tops and bottoms, guys. It means that the market reached an area, the triggers remain below, and it reversed the area. This means that decisions were made so strong in an area that the sellers took over, that the buyers couldn't do anything else. And right here, that the buyers took over, that the sellers couldn't do anything else. So when I talk about strong tops or bottoms, and this goes back to Cheetah's question this morning, if price reaches an area, the triggers remain below, it reverses the market, guys, this is strength. This is the precursor for the highest probability trades going the other direction. When the small triggers or the large triggers kind of break through, right, like I did here, sometimes it just continues in the direction of that trend. So defining a strong top or bottom and no triggers through termination, what does that mean? Even they're piercing the levels. So let's keep it simple, Cheetah. And let's look at this right here. Let me go through. Let me take a picture real quick. Boom, boom, boom. And I think I know what you mean. But let's do it and just let me be sure. One line of the small triggers poked its head through, right? So in order for the small triggers to be through, both lines of the smalls have to be through. Here, both lines of the small came through. Do you see it? So if I have this look on this area and the market goes up for 17 days, it didn't come from a strong bottom. It takes both lines of the trigger getting through. So here, the smalls didn't make it, the large didn't make it, strong top all day. Is that cool? And then this is only a termination condition, Cheetah, until that reversal. Now it's considered a strong top. So if we go back to the live market, see how the second line of the small triggers didn't break? This is definitely a termination condition. Once it reverses, then it's a strong bottom. Does that make sense, everybody? And what you'll find a lot is, let's see if we can find an example real quick. And it's hard to find examples on the weekend. If it's not coming from an area, it may push up. Has nothing to do with divergence. Paul, nothing to do with divergence. Divergence doesn't print until the third bar up. The only time divergence comes into play is if price reaches the divergence line and the triggers don't break. Now it's a termination condition. Pretty cool, right? Here it's just a loss of momentum. Here it becomes a pivot stop out. Now it's a termination. So that idea of a strong top or bottom, guys, it's going to fuel the highest probability trend trade. And I dropped a picture in the room earlier, and let me pull it up real quick. And Cheetah, thanks for asking that question, because it's that sort of stuff that sets up the lessons that people need. This was a strong bottom. This strong bottom says that these areas are more likely to break because there was a super solid decision made at key areas to reverse the market. This is a bad top. This bad top says that this 50-50 look is more likely to fail. The buyers took over. They smashed through the area. A pivot stop out. Let me go back to it. Let me finish this lesson, Paul, then I got you. A bad top 50-50s are more likely to fail. When the smalls smash through but the large don't, this area is less likely to break from a bad top than it is from a strong top. And that's why we identify these. These solid decisions, no triggers through, create an awesome push when they reverse the market. And this is where the 50-50 becomes a higher probability trade. And if it's a bad top, if it's not from a no triggers through termination, that medium probability trade I'm going to give you a plan for is less likely to work. And that's how that's going to work its way in. So let me go to the user guide real quick, and let me go to tops and bottoms. So Paul Flowers, great question. If price comes down and goes up, if there is a loss of momentum, if momentum doesn't follow price, do you see where my cursor is on the third bar, Paul? That is where that blue line prints. So price doesn't reach the area. Price doesn't reach this divergence low. Price and momentum, or lack thereof, create it somewhere all the way up here. So this just lets me know, hey, Paul, there was a loss of momentum at this pivot. Doesn't mean a thing, really, other than a loss of momentum. When price comes back to that line and the triggers remain above, this divergence low becomes a termination condition. If price trades below that blue line and back above, it becomes a pivot stop out of a prior divergence line. And anytime price trades below and back above one of these divergence highs or lows, no more short trades. This can stop the market. Does that make sense? So just a pivot, now it's a pivot stop out. And when these pivot stop outs line up with fibs that are holding, oh, they become powerful, looking for those bigger moves the other direction. Great question. And look at how far the market shot off of that termination condition with no triggers through. Guys, this is the look that's more likely to break these areas. This is the look that create areas that are more likely to break with the momentum. Yeah, get the terminology down. You'll get there. So, good stuff. Are there any questions? Let's do it this way. Are there any questions about just the advantages, being able to recognize them? Odds favorable momentum, the separation of the triggers. Does everybody, most people have this by the first day. Momentum's pretty easy. Pop it in the room, absolutely. The clear path, the recipe never changes, guys. If price reaches an area and the triggers remain below, that's a termination condition. If the smalls and large get past the area is broken. And then finally, you're just going to use that refinement to determine where the market is most likely to continue. You're going to use that small chart. So the idea, and Paul, while you're typing, I'm going to pull some stuff up here. The idea is that you've got to be able to take these three things. Price, absolutely, Paul. In order for it to be a pivot stop out, the only way it's a pivot stop out is when price trades below divergence line, then back above, or if price trades above and back below. If it hits it to the tick, Paul, and it will sometimes. Let's see if we can find an example. If it hits it to the tick, it's just a termination condition. And of course, it's not going to give me a good example, right? But let's talk about what it is. So, I like this. So right here, Paul, the sellers were able to push down hard, right? The sellers were in control. They were pushing it down. They were trying to make it go down. And right at this precise number, which is, let me see what that number is. Right here at 55.31.25, the buyers told them, go to hell. You're not pushing down anymore. The buyers stole their momentum and pushed the market back up. And this is a very specific line in the sand created by the buyers. Well, the sellers did the same thing up here. The sellers said, no, buyers, you're not going any higher. So when the buyers tried to push past their line in the sand, the sellers said, no. We already told you we want to fight right at this line. And then when the sellers hit theirs, the buyer said, dude, we already told you that we wanted to fight. And look at how that line in the sand is exactly what's creating the bounce, right? And when that line in the sand lines up with fibs, it's even easier to recognize. And then it happens again. And then it happens again. And rule number 2, guys, is keeping you out of the fight from the buyers and sellers. And then eventually, the sellers do win. Look at this. 1, 2, 3 divergences in the same price range. Eventually, the sellers create odds favorable momentum. Eventually, the sellers give you a clear path with odds favorable momentum. Let's see what that looked like. Was that this morning? I don't think that was this morning. That might have been the day before. So let's scroll back to the day before and let's see what happened when the sellers won the fight, when the sellers made the decision, when the sellers gave you a clear path. It pulls right back to the mid-band. It's a little outside of triggers though. But this is the easy one. Avoid the fights and get that clear path, guys. Clear path is amazing for creating advantages. So you've got to be able to recognize a couple pretty simple things right off the bat. And this is what's going to set you guys up to become a chart reader. And before I do this, guys, I'm going to kill Discord and bring it back real quick. You're going to see me go away. You're going to lose my screen, but you probably won't lose my voice because I noticed that Discord is really dragging. So I want to kill it and bring it back and see if we can get a little more speed in it. So I'm going to end it, and then you guys can probably hear me. And I'm going to bring it back up. And I think tonight I'm going to go through and just do a 100% clean out on this computer. I don't feel like it's running as fast as it needs to. But Discord is struggling a little bit this morning. On my way back. Nobody panic. Here I come. You know what I'm going to try is I'm going to try not popping it out and see if that helps. I'll go full screen on you guys here. And I'm going to share my screen and we'll see if that speeds it up without having 2 different things running. Everybody have me back. You can hear me. You can see me. We're good. Awesome. Cool. So guys, this is the chart reading 101 thing that I put together for you guys. All this does is it gets you focused on seeing these advantages, being able to recognize them at a moment's notice. So to get to where you want to be, you have to be able to recognize some of these looks and patterns quickly. Chris, no sound? Give me a Y if you guys can hear me, please. Okay. Cool, thanks guys. So this is designed to create recognition fast. Take 25 pictures of strong triggers and then take 25 pictures of weak triggers. And guys, I promise you, if you do it and you put them in the spreadsheet, you'll never get confused between the two. After 25 pictures, looking at strong triggers, looking at the separation, and not just looking at them and taking pictures, but actually annotating. This is why the triggers are strong, because the smalls are above the large, because the smalls are below the large. My advantage is momentum, and this is rule number 1. And if you do that 25 times, guys, not only on strong and weak, you're not going to mess this rule up. You're going to have rule number 1 committed to memory inside of like 3 hours. And then you have to do it with termination conditions and a clear path. You've got to write that recipe. Price reached an area. The triggers remained above support, below resistance. I can't take a trade into this area. My path isn't clear. Rule number 2 isn't met. If you go through this, strong triggers, weak triggers, clear path, termination, that 50-50 look, reminding yourself that it's not a clear path, and then go find those entries, guys. Just go circle them, annotate them, areas inside of favorable or triggers. What happens is these looks become easy. You begin to recognize them at a moment's notice, and this is what you're going to piece together to create a trade. Guys, a trade is nothing more than 3 rules that create a statistical advantage. So once you can identify those 3 rules, you can determine, hey, I do in fact have an advantage. As you're going after those rules and taking those pictures, guys, I'm also giving you a high probability trend trade checklist that has each rule visually, right out of the user guide. What's a strong top or bottom? A good top or bottom? Well, it's a no triggers through termination that reverses the market. There it is visually. This is strong triggers. This is strong triggers. There's my advantage. This is weak triggers. So you know exactly what you should be snapping pictures of. You also know what you should be writing on that chart to commit it to memory. There's my termination. There's my clear path. There's my potential to break that 50-50. And there's your windows of opportunity, guys, for both longs and shorts. Once you get these concepts down, you'll be able to pinpoint exactly where the market is most likely to continue. You'll understand exactly what it looks like in the moment's notice. I'm also going to give you a high probability trend trade checklist that you can print and put on your desktop. Take your biggest, fattest, most delicious crayon and police yourself. No worries, Adriana. Police yourself. Make sure that you're following these rules. I've never had anybody follow this plan, the high probability trend trade checklist, and do worse than 70%. This is a great way to find profits as you learn to read the indicators. This is designed to get you to read your indicators. And then finally, this is going to lead you to the KISS plan. And the KISS plan I give every day, guys. And the KISS plan is a stepping stone in your learning journey. The KISS plan is designed to optimize your chances of success with the high probability trend trade. The KISS plan is designed to keep you focused on the advantages, making sure that you have what you need every time you enter the market. I'm going to see if I can upload all of these. Here's all of those things right now. And then it's going to be through your simulation, through study, through class feedback, continuous practice. You're going to create a plan, guys. You're going to create your plan. You're going to create the Morgan plan, the Joel plan, the Muser plan, the William plan. And it's going to be based on your experience reading the indicators. So the better you get at reading your indicators, the more advantages you're going to see. And you've got to remind yourself that your chart read is not your rules. Your chart read will tell you if you have a termination that reverses the market. And if your chart read says that you do, well, then you mark yes. Your chart read will tell you whether or not you have strong triggers. That's the rule. Your chart read will tell you if you have no termination conditions, and your chart read will identify your area. If you can mark yes to all of these, guys, you've got the recipe for the high probability trend trade entry. This is the one that typically wins 70 to 80% of the time. This is the one that creates confidence through the memory of success. This is the one that's teaching you to read your indicators. But then you're going to have to manage it, guys. You're going to have to manage that high probability trend trade entry. And this is the second piece of the puzzle for you guys. The second piece of the puzzle is you guys doing something with that great entry. You guys doing something with that entry from areas inside of favorable large triggers. But once again, you're going to create a plan based on your own goals, guys. You're going to create your own management plan based on your ability to read the indicators. But until you can do that, I'm going to give you the most mechanical way to do it. And everything has to start, guys. Everything has to start with the large chart rules being met. You have to make sure that you have momentum and a clear path, and that you're waiting for that reversal bar, right? And at the time of the reversal bar, you're not just jumping in. You're identifying your favorable large triggers, overlapping one on top of the other, drawing a box from the top of the line to the bottom of the line, and not caring if it's synthetic or large, but rather you know that this is where the price bars are likely to continue to, right? And then once you do that, you're going to find those areas inside. You're going to refine that window of opportunity. You're going to reduce the point to where the market is most likely to continue, from the lowest point of resistance to the highest point of resistance. And guys, all this sequence is in the spreadsheet that I gave you. And then once you do that, you're going to activate with the utmost confidence a limit order at the lowest point of resistance inside of favorable large triggers. And you're going to start to pray, rub those rosaries, whatever you need to do, because you've done everything that you can do at this point. You've guaranteed the advantage of momentum. You have demanded that there's a clear path. You've pinpointed where the market is most likely to continue, and you have your limit order at the most likely spot for a bounce. And then if it pulls back to your area inside of favorable large triggers, then the management phase starts, guys. You are in that trade with all those advantages, and your initial stop is going to go where the market should not go, beyond that window of opportunity, beyond that correction point, those trigger lines. And you're at a standstill. You're either going to get stopped out, which is a normal part of a positive equity curve. You're going to get stopped out where the market shouldn't go. You're going to get stopped out beyond that window, beyond that correction point. Or, with all those advantages, you're going to get a reversal bar in the direction of the trade. And if you do, this is if then. If I get in where the market is most likely to continue, then my stop goes where the market shouldn't. If they're nice enough to give me a reversal bar in the direction of my trade, then my stop goes 2 ticks above that reversal bar, and I will sit on my hands until the next if. If I don't get stopped out and it hits my first target is only $100 in the distance, guys. My first target is sometimes even hit on the first reversal bar in some instances. And this $100 is designed to create confidence. And this $100 is designed to get you paid. And this $100 goes into your account. You're going to hear NinjaTrader tell you that it got hit. You're going to feel good. Your palms are going to dry up. The butterflies in your stomach are going to go away. And we're going right back to if then. You're going to move your stop to break even. If my first target gets hit, then my stop becomes break even. And then if it doesn't hit my stop, well, then it's going to go to the second target. And your second target's only $200 away from your entry, guys, which means that in one trade, with every advantage, in a trade that typically wins 70 to 80% of the time, in a trade that offers the highest chance of success, using the most mechanical, emotionless, fearless management plan ever, you just made $300, guys. And $300, a lot of you guys think that you have to have $5,000, $7,000 trades to be successful as a day trader. Guys, this is one trade producing $300. If that's the best you do every day, even if it's 3 break-evens, that's a $1,500 week. Just paid for your Corvette. And if that's the best you do every week, guys, that's a $6,000 month. That might cover your mortgage. And if that's the best you do, guys, that's an extra $72,000 every year before taxes, right? Based off of 252 trading days. It's actually more like 75. But this is the goal for new users, is to get you comfortable with the idea that advantages are what you're looking for, that you're speaking to yourself in terms of momentum, a clear path, and an entry area. And once you get these first two, to where you never have a problem with it, guys, there's a million opportunities out there, but you've got to learn the basics so that you can find the advantages beyond the basics. And that's what the KISS plan does for you. And I put all of this in the room for you guys. I put every one of these in the room for you. And then your second trade for you new users, the second trade is the 50-50, that area with the potential to break. And I have to go back to this, guys. If it only has the potential to break, you'll never have a clear path. So this is designed to keep you focused on momentum in your entry area. And the first thing that it says is one area not broken. Not 3 fibs that the large triggers haven't made it through, but literally one area. It increases your chance of success. That strong top or bottom increases your chance of success. You have to have strong triggers on both charts because it takes momentum to break areas. And then it tells you no divergence on the 5-1. Guys, if divergence prints on the 5-1, this is the biggest killer of the 50-50 trade. This is where most of you lose your trades. But if there is no divergence, you're going to use that area, guys. You're going to get in at the areas inside of triggers. And then it reminds you that divergence, no trade. And then once you're in, you've got to manage it. And it's not a high probability trend trade, so the management is different. So you have to know that it's a 50-50 trade. So you're going to take quick profits. You're going to get to break even quickly. And then it even reminds you a third time that divergence is a killer, guys. And all of these are in the room. High probability trend trade checklist, pictures. Look at that. Weak triggers right at a fib, and boom, down it goes. Isn't that crazy that you guys knew about that line? And sure enough, it got there. Whoop, that's my untitled. Let's see what crude oil's doing. And then I'm going to take a break. I'm going to go stretch my legs. Crude oil. All right, so let's walk through it, guys. Do I have odds favorable momentum? What do you think? New users, this is your pop quiz. And I'm going to tell you guys, if you play along, you're going to be better at reading the markets. Do I have odds favorable momentum on my most current bar on crude oil? No, Jeffrey says. Sure don't. That's that weak anything can happen look. And then we can even ask ourselves, do I have a clear path? Hey, good morning, 10K. Price reach yellow 1-to-1s, the triggers didn't break. So I'm void of the first two advantages. Guys, should I be entering at support without momentum, without a clear path? Sure feels like financial suicide to me. 90% of my day is spent waiting. There's that bad bottom, right? Not a termination that creates the reversal, goes right to the mid-band and finishes the move to fibs. Guys, if you don't believe that the people that move the market know where these key areas are, all you have to do is scroll back a little bit and see. Should we just for grins see what this potential to break looked like? It was in the middle of the night. We were probably all sleeping unless we got up to go to the bathroom. Corrected right to the triggers. There was a mid-band just above them. That's a tough catch. Let's see what this one looked like. Circle a tail. Go take a look. Right back to support inside of the triggers. But it is into a termination. The weekend makes it a little more difficult sometimes, guys. But if you scroll back, you're going to see the same thing over and over. Strong triggers break areas. Areas stop the market, right? So everything is in the same thing. The potential to break doesn't guarantee that it breaks. It sure can reverse. So that's my first hour. For those of you that are brand new, this is my first hour every week, every day, is we talk about momentum, a clear path, and an entry area. And then the second half of class is going back and looking at what you guys are doing, talking about the charts that you've posted, the advantages that are on them, me offering my feedback on the chart reads, on entries, on exits. So just a reminder, if you want the feedback, if you want the best feedback, guys, tell me what you see and tell me why you did what you did. And if you go back and use the language, here's my momentum, here's my clear path, you should be scaring the dog and cat, talking about these out loud before you get into a trade. And what you're going to find is that you're going to create a plan where you can win more than you lose, just based on patterns, nothing to do with emotions. So I'm going to ask one more time before I go stretch my legs. Does anyone have a question about momentum, a clear path, or an entry area? Everybody in the room is committed, right? Did anybody do 5 of each over the weekend just to become a better chart reader coming into the week? Of course you didn't. That feels like work. Telling you right now, if you want to get to where you want to be, this is it, guys. And if you have a question about any of these, I can't see your faces. I don't know if you're confused. Just for the tops and bottoms, Cheetah? Right on. You tried, then life happened? Yeah, dude, life gets me all the time. Guys, another thing that I do, and I'm doing, and we're doing this for a couple different reasons, but sim all weekend, Chris, I like it. So you have some pictures with questions for me? I'm making these little funding blogs, guys. So Cheetah, this is for you. Strong tops and bottoms for the new user, right? Because now I know what you're working on. Chef, this is for you. Favorable large triggers, entry options. If you're working on management, guys, here's a way that you can use the small chart 1-to-1s. So what I'm doing, guys, is I'm creating all of these. I love the shorts, Jen, because I can take that one concept you need a little bit of help on and drop it into a minute, right? Simplicity. So thank you for that. I have fun building those. And guys, the second part of that, what Jen's talking about, and then I'm going to go take a break. I stink at taking breaks. If you go to the Nexgen webpage Um, I'll put the link in here. There's the 60-second video series, guys, right here off the front end. And this is just me flapping my gums about simple concepts and making it as basic as I possibly can for you. I firmly believe in simplicity, guys. I think that the more we complicate things, the more difficult life becomes. And if there's something that you need me to build a little blog on, if there's something that you want to see a video for, guys, just let me know. I'd love to make it. That's what I'm doing. I'm just trying to build more educational materials so people that maybe don't want to come to class or can't come to class can still find the answers they need. And a lot of it is built off of y'all's great questions. So there's crude oil with no momentum and no clear path. Here's the S&P coming off of a termination condition directly into a termination condition. And look how price is pulling back to those large triggers, guys. When price accelerates away from those large triggers, hits an area, large triggers are all the way up here at this reversal bar marker, price is more likely to close the gap, which means that if you were hoping and jumped in at this mid-band, you may have the potential to get run over. And then Cheetah, strong top or not? What do you think? The smalls made it all the way through and the large almost did, guys. Strong top or weak top? Good top or bad top? Anybody? Anybody? No, Cheetah, the triggers got through. Weak. It's always weak. If the triggers get through, see how both lines are the small? That's all right. You got to study it a few times, Cheetah. You want me to show you how to make it the absolute easiest? I'm going to pull this up real quick. This is what people don't realize is, guys, you don't have to be in a trade to get smart. I told you, I'm no good at taking breaks. So let me pull up the picture, and we're going to start on the left side, guys. If you want to do strong tops and bottoms, the first thing that you have to do is you have to define it. So a strong top or bottom is a no triggers through termination, right? Price reaches, triggers above, below area. That reverses the market. That's your recipe, guys. It is a, Chris, I don't know what you're talking about. That's a termination condition, so absolutely not. Chris, I do the same thing every time. I promise. Every time. When I want to take a trade, I say, did price reach the area? Where are my triggers? Every time. 100%. Did price reach the area? Where are my triggers? So it's not even close or not close. I don't play horseshoes and hand grenades. I play, did price reach? Where are my triggers? And what it does, Chris, is it keeps me from forming opinions, and it keeps me from having 173 different scenarios. Well, this one was 2 ticks away, and this one was 1 tick away, and this one hit it to the tick, and this one went 4 ticks beyond, right? But if I know my rules, this is not a termination. This only has the potential to break. So I have to go to my rules for a 50-50, right? That's all I'm doing. Once I have momentum, I define my path. It's 50-50, which means that I have a set of rules to keep me out of it. And if you really keep it that simple, you'll be amazed at what happens. Cool, I'm glad I answered your question. So let's start on the left. Price reached resistance. Yeah, Chris, chop, as people love to call it, is one of the biggest spots where traders lose money. So creating opinions, right? Termination, 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 termination. If you keep it simple and all you do is talk about those very simple rules, you'll be amazed at how you stay out. Because people get killed in consolidation by forming opinions. I know that my rules aren't met for a long, but I think because of the termination condition, it's going to go up from here, and you find yourself fighting things. Well, it pushed all the way up to resistance and the triggers didn't blink, so I'm going to trade into this area because it's probably going to break, rather than I don't have a clear path. All right, strong tops and bottoms. All right, Cheetah, first one's yours. Price reaches resistance, triggers remain 100% below, and it reverses the market. Strong top or bottom? Or is that a strong top or a weak top? What do you think? Strong, perfect. All right, so we're going to keep it pretty simple. Price reaches the area, smalls break through, large try to but can't seem to. It does reverse the market. Strong or weak? What do you guys think? Triggers made it through, so we're keeping it simple. All right. Price reaches Fibonacci support. The small triggers try to break through, but the second line couldn't get through, guys. The small triggers never completely breach the area. Strong. Right when that reversal happens. Beautiful. So then let's go like this. Price reaches resistance, Cheetah, and those large triggers never even rolled up. Right? It didn't even have to reverse the market. Could we call this a strong top? I feel like we could. No triggers through termination, and it was so kick-ass that it never even rolled it. Let's call that a strong top. And you'll see this sometimes. I think I have a picture of it from this morning. That when a weak top pulls back and tests resistance, and everything continues down, this was your overrun creating weakness. That is your definitive not happening. So this is a termination. It never reverses the market. Is this going to be considered strong or weak? Because remember, it's two parts. Not only is it a termination, we got that. It's weak. Perfect. So the easiest way to learn this, Cheetah, is exactly like I did it. Don't worry about taking a trade, right? Don't go, oh my gosh, in the moment, what is this? Scroll back. Smalls didn't break, it reverses the market. Strong or weak, what do you think? This is how I learned this. Not in live trades, guys, not in a live market, but literally going back through repetition. Price reaches resistance, the triggers don't break, it reverses the market. Anybody in the room, strong or weak? Strong, thank you. I love it. How about this one? All the triggers broke through, but it reversed the market. Strong or weak? It's that simple, guys. Price reaches, none of the triggers broke, it reversed the market. Strong or weak? It's almost too easy, right? Small triggers made it through, but it reversed the market. Strong or weak? Small triggers made it through. This is where language pays dividends. It has to be a no triggers through. So it's that subtle, guys. This is strong. This is weak. This is weak. This is strong. So you've got to know, this is where I believe language creates a huge advantage, guys. Absolutely. But this is where language pays huge dividends. If you can't say this phrase right here in your head, if you can't say that verbatim, a strong top or bottom is a no triggers through termination that reverses the market, then you're going to struggle with strong tops and bottoms. But if this is what you say before you try to figure it out, you'll see the triggers go through and you'll be like, well, shit, this can never be a strong top or bottom. Because this is how it becomes easy. Do it with strong triggers. Smalls are above the large are wide spaces between, right? You can say this is strong triggers and hope that it sticks, or you can type it out. Smalls above large, wide, space between. This is strong. This is momentum. This is rule 1. Does that make sense? Guys, it's the language with the look that creates it. And this is why this 101 section, everybody ignores it. Nobody wants to do that work, but I promise you, check this out. I'm going to click on strong triggers. Are there any doubts what strong triggers look like? None, right? Strong triggers mean separation between the smalls and large in the direction of the trend, like scissors open. This look gives me the advantage of momentum, rule number 1. Pretty simple, right? So what if you go through and you click on 50 pictures? No, Steve. No, Steve, no, Steve, no, Steve. What does it mean to have a strong top or bottom? Hold on, let's go back. First, it has to be a termination condition, right? Hold on, Steve, I got one for you. Oh, let me get it real quick. Strong tops and bottoms for the new user. Bum, bum, bum. Guys, I got something for everybody here. Something for everybody. Open up Microsoft Word. So when learning termination conditions, and let me give you this one in the room. So guys, if you're working on strong tops or bottoms, read this 10 times. Read it 10 times and you'll be amazed. You'll never make the mistake again. One of the biggest challenges that new users have is they see something once, they try to learn something once, and when they do, they believe that that it's cemented in. There it is, right below you, Grant. They believe that it's like gospel truth after seeing it once, but it takes the repetition to create the recognition. So when learning termination conditions, guys, the recipe's always been the same. If price reaches an area and the trigger lines are above support or below resistance, you have an area likely to stop the market. In these termination conditions, this goes into the whys, are where decisions are being made by the people who control the market. Trades may be entered, exits, profits taken. There may even be a fight from opposing forces. Rule number 2 for the high probability trend trade keeps Nexgen users out of this fight. So you have to know terminations first, guys. If you didn't learn terminations, you're never going to understand strong tops or bottoms. So when looking for strong tops or bottoms, the first part is finding a termination where no trigger lines have violated the area. So Steve, it has to be a termination condition where the trigger lines did not violate the area, where the trigger lines did not break the area. So this is a termination, and it's nothing more than a termination. And then once that happens, a termination is not a strong top or bottom. A weak top or bottom can never turn into a strong top or bottom. But once the triggers roll from a no triggers through termination, it becomes a strong top. It took this particular termination 6 bars to become a strong top. Here it's nothing more than a termination condition, and when they roll it becomes a strong bottom. So if it's weak, Steve, it's weak forever. It can never change its stripes, right? It's just weak forever, and that's okay. It doesn't mean that the market won't go up indefinitely. But from a strong top, when decisions are made right at the key area and it reverses the market, it's more likely to push further in the other direction. This is where those 50-50s are more likely to work. This is where the highest probability trend trade that you can take happens from. So I encourage you guys to learn the language first. And once you learn the language, right, this is a termination condition. The smalls peeked their head through, but it didn't break. But the smalls made it through. And it reversed the market. So Steve, we have to call it a weak bottom, right? No worries. We have to call it a weak bottom. And no matter how far this goes up, I'm never going to change that. It's just always going to be a weak bottom. That's okay. That's not a negative. It just means that it's not the highest probability give me the best chance of breaking those next areas. So when this was a weak top, these areas had the potential to break, but it's not uncommon to see it continue in the direction of the original trend. And it wouldn't be unheard of that the buyers are trying to get up to this area up here. They tried to push through here, couldn't make it. 50-50 fails, and now they're heading the other direction. And there's a lot of work to be done, but I'll leave that box up there. Guys, I'm going to run a lap and stretch my legs real quick. I'm going to scroll up to the very top, just for you guys that don't remember, is I've got to scroll all the way up to the top to start seeing your pictures. So I'm going to do that. I'm going to grab a couple. I'm going to talk about them, and then I'll scroll back down. So if I miss a picture, please tell me. If I miss a question that you posted in the room, please tell me. It's not unheard of for that to happen, but it's never intentional. Let's see what we have. And then Cheetah, you got us going today with the questions on tops and bottoms. I think we've cleared that up. I feel pretty good about it. I did pop this one in the room as well. So guys, you can go steal this picture if you want. Uh-oh, it's not opening. All right, when the links don't open, I'm going to have to do that little reboot again, guys. I apologize. So you're going to hear me, but you're not going to see me for a second. I am going to close out Discord from my task manager and hopefully come back in. I don't know why it does this, but it does. So I'll be right back. Hopefully you can still hear me from the great beyond. Whoa. On my way. And it is slow, and here we go. All right, can everybody hear me? We're good. Screen's coming up right now, guys. Just want to make sure. Chris H, check it out. Termination to termination to termination. We're waiting for that break. Waiting for the break, guys. Waiting for a clear path. And if we get it, let's have some fun. Can you guys hear me? Give me a Y if you can hear me. Yup. Maybe you, Steve. All right. I'm going to scroll up to the top again, guys, and we're going to start looking. And then, Pete, I believe you've got the next ones in here. Scrolling, scrolling, scrolling. All right, I'm going to click on both of these real quick. Let those come up. And let's do some chart reading together, guys. All right, strong triggers up, odds favorable momentum, no clear path. Large hasn't gotten through. I'm not going to call this a solid bottom. It's coming really from nowhere. But with this level of momentum, potential to break, no divergence, and one little window of opportunity, Pete, beautiful. Oh, look at that. 3 divergences in the same price range even kind of helps confirm that we're probably headed up. Pete, I love everything about this trade. Momentum, potential to break. So you didn't sacrifice momentum over here. Strong on both charts. Pulls right back to one line, and you get out at trouble. Absolutely perfect, dude. And then we get a termination to a termination. Weak triggers right at the same termination. Couple divergences, and you take a little momentum trade. And you're able to capitalize on this one. Not a high probability trend trade. Definitely not a high probability trend trade. But a perfect recognition of momentum and potential. And you nail your entry and you get paid. Pete, really well done, dude. Nicely done. And then Adriana, if you're on your scooter, 50-50. Okay. So, Adriana, do you remember when I said that I would give you guys a plan for taking these 50-50s? And then when I talked about it, the one thing that I said is the biggest cause of losers on the 50-50s is divergence. And that's exactly what you had. So you had a couple things going against you, and I'm going to do it like this real quick. You guys will dig this. I'm going to show you how having rules works. Can you guys hear me? Give me a Y if you can hear me. Yeah. All right. Thanks, guys. Guys, if you ever can't hear me and you see a bunch of Ys, it means that it's you, probably not me. Which is okay. I mean, it happens. Just reboot and come back in. All right, so Adriana, this is what we're going to do here. Is I'm going to take a picture of your chart. Let me bring this up. And I'm going to put the KISS plan rules on it. And this is designed to give you the best chance of success. And guys, when I said that I would give you everything that you need, I promised. This is it. So let's do it. You ready, Adriana? Let me get an arrow color. Because you asked how to avoid this, right? Mark, how do I not lose this trade? So Adriana, are we coming from a strong top or bottom? Are we coming from a no triggers through termination that reversed the market? What do you think? I feel like we have to say no, because the triggers got through the one-to-ones, right? Does that make sense? Because that's the first part of it. This is the one that I don't do without. This is the one that I refuse to forfeit. No worries. If the triggers get through the termination, Adriana, it's not a strong top or bottom. If the triggers make it through, it's just not a strong top or bottom. You did have odds favorable on the 13-2. You did have odds favorable on the 5-1. But then you got divergence on the 5-1. And it says no divergence, right? And it reminds you no divergence. So Adriana, between not having a strong top and divergence printing, these are more likely to lose than they are to win. Does that make sense? Yeah, you guys have rookie back pain. If you can stand up and it doesn't hurt, rookies. If I stand up, my whole left leg goes numb. Adriana, I love 50-50s. I'm not going to lie to you. I take a lot of 50-50s. So let's do this. There's a termination that reversed the market, right? There's odds favorable momentum, but there's that divergence. Dag nabbit. And I don't have strong triggers. Do you see it? So if you know the rules, I do have a strong top. It does have the potential to break. But now I have divergence with weak triggers. It might break, but I've lost my advantage. And if you scroll back right here, there's a potential 50-50. Coming from a bad top. Excuse me. And I want you to see what happened. Divergence. And the challenge for everybody in this room, is that when you see this area inside of favorable large triggers, is you forget all about your rules and you just want the short trade. Is it anybody but me? Can we be honest together, a little group hug? Is it anybody but me that gets so excited about being in a trade that you forget all about your rules and you just hope that you win? But Adriana, check it out. Bad top, 50-50, divergence. My rules say don't take it. right? That would be an unnecessary loser. Good top, 50-50, one divergence, tiny window of opportunity. My plan lets me take this short trade, but I have to manage out if I get a second divergence. So you will grow. You will grow. And the 5-1 will try to talk you into trades that are less likely to work. And it just takes a while. And you'll get to this point to where you know your rules so in depth that you don't get caught up on these maybe trades. It is the hardest thing. Jen, my brother, and I went back and forth on Skype this morning. Not perfect, no trade. Not perfect, no trade. Doesn't fit my plan, can't take it. That's a term. And we literally just sat talking to each other through the 90% rather than focusing on our charts when it wasn't there. So Adriana, your initial 50-50 look says absolutely no trades because of this divergence. When you really get good at tops and bottoms and recognizing the strength, you might take one shot with a divergence because you believe in the power of this top. But you will manage it aggressively. If a second divergence kicks in or something like that, you'll exit it. But if you really want to have the best chance of success as a brand new user on these 50-50 trades, you just have to be willing to say it's not my trade and wait for the next best one. Does that make sense, everybody? Because through extensive study, we've identified what kills the 50-50 trade more often than not. And it's a bad top and divergence. Good stuff, right? Guys, I'm telling you, you have everything that you need. You have everything that you need to be successful. The only thing that you don't have at this point, guys, is experience. The only thing that you don't have today is repetition. So you have to go through. You have to take these pictures over and over. And you've got to keep getting it to the point to where you know these advantages so intently that you don't deviate. And then once you get to that point, you're going to find a lot of other opportunities. And then Jonathan says, for later, no trade, possible termination condition. And then Jonathan, great recognition, but it's not a possible termination condition, my friend. It is a 100% termination condition. It is 100% price reach the area, the triggers remain above. This is rule number 2 not met, no matter how much you want it to be a trade. Great chart. I love that you're taking pictures when your rules aren't met. Jeffrey Dean, weak triggers, wrong direction, directly into fibs, and you jumped in. Jeffrey, how you feeling today? You feeling tough? Because I'm going to come after you real quick. I'm going to do it with love in my heart and a smile on my face. But I want you to see something. I want you guys to see how easy it can be. Ready, Jeffrey? Did you have momentum? So what color was your background? What direction is the trend? Let's start with that. What direction is the trend? Which means what? Long or short? Up or down? Means up. You went down. So there was your first challenge as you fought the trend. In order to have strong triggers down, Jeffrey, the only way that we can do it is if the color of the triggers matches the background. Let me go find a picture that I can open up for us here. And do you guys remember when I said when you learn these very simple concepts individually, you're never going to have a challenge? So Jeffrey, strong triggers in an uptrend. Come on over here. Sorry, I opened on the wrong one. Strong triggers in an uptrend means that the smalls are above the large are wide, there's space between the two. This is strong triggers up. This is strong triggers down. So to sell the market, Jeffrey, what I have to have if I'm going to have the advantage of momentum is this is my look. Does that make sense? And I'm not really beating you up here. What's happening is you're going to be 1,000 times better tomorrow when you wake up for this lesson. The only way I'm looking for a high probability trend trade short is if my triggers look like this. So you've got to commit this look to memory, Jeffrey. You've got to understand what it looks like to have strength so that you never question it. So I'm going to ask again, if my background is green, my smalls are above the large, do I have momentum down to take that short trade? No, and that's okay. So then we go to rule number 2. Let's just say hypothetically that you did have momentum. So rule number 2 says no termination conditions, and I have to understand what it takes to create a termination condition. Did price reach an area? In this case, it's support. And are my triggers above the area? So Jeffrey, price came down to Fibonacci support, right? And none of my trigger lines broke. They're all above this area. And that means that support 80.55 in this picture is a term. Not a tur, but a term. No short trades. So not only do I not have momentum, I also don't have a clear path. And then just even rule number 3. So rule 3 says, and you're going to dig this, and it's kind of cool how it all comes together, I think anyway. I need a pullback to an area inside of favorable large triggers. So you did have an area, right? And you did have those triggers. And this is where you kind of get that partial rule thing in your head. You're like, okay, I know there's an area, I know there's triggers. These are my words. My words are areas, triggers. Rules 1 and 2 said don't even look for the entry, right? But when we're looking for pullbacks, and this is going to go again, and I know I sound like a broken record, guys, forgive me, is you've got to go through, and let me go back because I've got them here. I've got pictures galore, my friends, and I will share every one of them with you. So what happens, Jeffrey, is you got to go back and you've got to, let's find a short trade picture real quick. Coming up right now. First, you wait for the reversal bar. This signals the beginning of your pullback. And then you find your areas inside of triggers, and that's where your order comes. But we missed the pullback part. We never let it pull back. Does that make sense? So all those documents that I dropped in the room help you with that. But if you get it, if you start writing, and this is why I say I want you guys talking to yourselves in terms of advantages. If you visit momentum, then you instantly know that it's not there. And if you talk about clear path on your chart, you know that it's not there. And if you talk about using a limit order at areas inside of triggers, you know that you omitted the pullback. And what happens, and this is, I think, awesome, is you get to the point through that repetition, through all that annotation, that you never say, is this a bad entry? What you find yourself saying is, were my rules met? Did I have an advantage when I tried this trade? Did I have the things that I need to tell me that it's going to win more than it loses? And Jeffrey, you get total gold star, rock star status for being willing to put this in the room and taking that lesson. And here you traded into a termination condition again, but this time you had momentum and it broke. And here you jumped in right into the termination condition and you got stopped out. Do you see how that works? A couple times? Nice job. Dude, good stuff. And Jeffrey, my pledge to you is that we do this every day until it sticks. right? We do this every day. You show me everything that you do. There are no wrong answers. The only time that this doesn't work is if you don't post in the room. Because eventually we have so many conversations that everything kind of just falls into place. And it's super cool how it works. So thank you for posting that. And I think there were some good lessons in there. And then Gary, this is NASDAQ. So termination reverses the market. You get a couple divergences, things roll, and you take a momentum trade, and that momentum hasn't blinked, and you're still going. Nice one, Gary. And I don't know who this is. There's no name next to it. It's just... Does anybody want to claim this one? It doesn't have a name next to it. Pro Massage 806. Welcome to the room. Everything says down, potential to break, pull back to the area inside of favorable large triggers, and exit. I don't know who you are, but this seems to fit the rules. Everything says down, pull back to area inside of favorable large triggers, and down it goes. Nicely done. Momentum for the win. Pull back to areas, reducing risk. Giving more room to those targets. Absolutely awesome. And then Morgan, first trade using the closing on the right side of the small triggers that we talked about. Right on. Misunderstood lesson here, Morgan. Actually, not really. So, everything is up, potential to break, pull back to the areas inside of favorable large triggers. So, Morgan, do you see how your small triggers were a full bar away? That's the go with the area, brother. But even when you're on this side, it works out. So when they're a full bar away on the NASDAQ, that's go with the area. When they're coming down, when you get to that area, right, and see how they're close, that's the wait for the close. No, you're still great, but that's a lot of risk, right? But you're on the right side of everything, so who cares? But that's the look where I'm going at the area. This is the look where I'm waiting for a close on the correct side. See the difference? Nice job though, dude. Very nice. The lessons stick if you guys hear me flap my gums enough. Let me see where we're at. All right, Pete. No trade here. There's never a pullback on the small chart. Just a good example of looking at a large chart. Strong bottom with divergence. Weak bottom with divergence. Odds favorable, clear path. Eventually went to 81. So Pete, based on this morning's lessons, not worth it on the hotkeys. I've never even tried it, Morgan. Based on this morning's lessons, do you see how that's not a strong bottom? Too much overrun there. Too much overrun. And eventually went to 81. Guys, always be careful when you start talking about what happened after, because there will be times, remember that there will be times when the rules aren't met and the market still goes. Right on, Morgan. There will be times where you don't have advantages and the market still goes. There will be times where you break rules and the market still goes. But the goal is having rules that win more than they lose, right? So even if a weak bottom 50-50, 173 divergences wins that time, it's less likely to do it if you take it 50 times. And that's kind of where the rules come in. And I just wanted to talk on that one since we spent so much time on strong tops or bottoms. And then sometimes it's just not your money, right? Sometimes you wish you could find a trade and they just don't give an entry, and you've got to be okay with that. Because one's probably coming. All clear. So weak triggers, clear path. You come off of support that's likely to hold, and it works. And if you wait for that close on the correct side, it sure makes it easier, doesn't it, Joel? So Morgan, there's a good example. When you're going to take a shot at an area, Joel, I love this trade, by the way. Everything says up. This is likely to hold. If you wait for that close on the correct side, you're not fighting that immediate, and you don't have to hope that it goes. Nice job. John, I'm going to rip your stuff to shreds. You better annotate those charts. We're teaching in this room, mister. He's all the way in Sarasota. He can't beat me up like he used to. Nice one, Joel. Joel's utilizing the idea that when price reaches an area and all the triggers are above, that area may stop the market. And he's adding it with everything up and above. And just great job taking advantage, dude. All right, Jeffrey Dean, let's see what we have. I see triggers close now and all bunching up. Seeing a setup for reversal, you have a limit order ready to go. All right. So, Jeffrey Dean, what direction is the market going? And guys, I'm going to warn you, don't try to trade like John Novak. It's going up, right? It's not even looks up. It is up. It's green, without a doubt. Your small triggers are up. Your large triggers are up. Your large triggers are up. Your synthetic triggers are up. Your small triggers are up. And you're waiting for it to go down. There's definitely a path of least resistance, Jeffrey. Go with the flow, man. It might reverse, you're absolutely right, but it's got a lot of work to do before it does. I want to see, just for grins. It bounced, and it just continued right back up. So let's find the high probability. Let's take the best of the best. Let's find the trades that offer the path of least resistance. Because look where you're going short. You want to go short 7 ticks above support, right? There's no room there. It can be easier. Let it go to momentum. Let it go to a clear path. Let it go to an entry initially. And you'll find opportunities to take these trades going the other directions. But it's a completely different set of rules than it is for the high probability trend trade. It's a completely different set of rules because you have to let it be a termination first. And then you have to let some things slow down and roll. And then you've got to find your entry. But when everything says up, your first thought process has to be absolutely no shorts. That's financial suicide. Trading against everything that the large chart is doing. So much so that my brother did write a book about it. Let me see if I can find that book. But what you have to keep doing, Jeffrey, is exactly what you're doing. Is just posting in the room, because we're going to have a conversation about everything, right? And I'm going to do everything that I can do to make your life easier. And as soon as I see what you're doing, it makes it easier for me to work with you. But this is that little thing that my brother put together. How to commit financial suicide in one easy step. Trading against strong triggers and trading in determination conditions. And those are the two most common mistakes that new users make. And just going with the flow. One of my favorite stories is my brother had a broker call him one day. And he goes, hey, Mr. Novak, because some people don't know. Um, he goes, man, I can guarantee you $1 million in your trading account by the end of the year. And John's like, heck yeah, how do we do it? He goes, just fund it. He goes, just fund it with like 2 to 3 million and fight that trend every chance that you get. He goes, you should be down to $1 million by the end of the year. I love that story. But it's very true, guys. We have so many advantages with this software that we don't have to hope or we don't have to be first. We can do it. All right, Jen. He started with 4 million, ended up with 250K. 50-50 fails, gives you odds favorable momentum. There was a loss of momentum, but the triggers were good. No divergence, pulls right back to support. And there you go. It continues right up to the termination condition. It's so much easier, isn't it? It's so much easier going with the flow. It's so much easier trading with the direction. It's so much easier trading with the triggers. Guys, it can be effortless. It can be super calm. No reason for sweaty palms. And Jen, you did a great job of it right there, showing just how easy it can be when everything's going the same direction. Nicely done. And then Steve Diego. Everything says down. Pull back to resistance inside of triggers. You put it where the market shouldn't go, and you took profits. And then, Steve, I know it got you break even. Do you remember when we talked about 3 divergences in the same price range? And that's exactly what you had. And this was your management opportunity right here. These 3 divergences suggested that things may push up a little further. These 3 divergences said that we might go all the way up here. So if you're in and you took profits at the potential trouble, that 3rd divergence becomes a great exit. And then at that point, you just kind of have to sit tight. Does that make sense? Becomes a good management opportunity. And they shuffled a little bit, but they did ultimately pull all the way back up here to resistance. That's okay. That happens, man. Was so excited to get the right on the entry, forgot about divergence. Yeah, dude, not only did you nail the entry, but you killed it with stops too. I mean, everything is perfect, right? And then we just go to that next level where you make a little and then you start sitting tight. Because Steve, and this is for everybody in here, once you can pick these out, you don't worry about the maybe trades so much. Once you start focusing on the high probability, once you start recognizing advantages, guys, it becomes easier to eliminate the maybe trades from the scenario. So great job on that one, and a good lesson on 3 divergences. And then Grant took a long trade. Large chart had strong triggers. The S-fib and clear path to the R-fib. Above support, clear path to resistance, only 1 divergence at the time of entry. Support looks strong since triggers never broke. Entered on the pullback to the synthetic. Small chart had 2 divergences. Tighten stop loss if there was a 3rd divergence. So, Paul, who was this? This was Grant, right? Grant, are you in here? Glad you got a day off. All right, Grant. Price reached the divergence high. None of the triggers broke. This is a textbook termination condition right here. Do you see it? And that's exactly what you traded into. You traded directly into a termination condition. And you did have couple divergences. That's just a tough look. Does that make sense, Grant? Just by the very basic rules. If price reaches a divergence high, the triggers don't break, you've got to respect it as a line that can create a bounce, that can stop the market. And your advantage of a clear path was gone. You had momentum, without a doubt, on the large chart. The small chart still looked like it was giving you that odds favorable. Your entry was right where it needed to be. Oh, that was your exit. You entered down here. Oh, wait a minute. So you had strong triggers. I apologize. I saw the pink dot and I was thinking that was your entry. You had split triggers and you let it come all the way back to the synthetics because it was a full bar away. You let it pull all the way back to support to take the long. All right, Grant, I have to change my thought process on this. Everything's set up. You let it close the gap, right? 2 correction points, and it went right to the second correction point. And then you carried it. And this is where this line becomes a target. That's, man, nice job, dude. And then you got out with divergence. All right. Totally change. And then John says he likes those spots too. Careful, Grant, you're trading like John Novak. Well, when you understand that price may correct to these areas, and then everything says up when it does, creates a pretty good opportunity. Nice job though, Grant. Sorry, I saw that entry wrong initially. I got my colors mixed up. All right, where are we? All right, we had Grant. It looks like we got Paul next. So Paul, let's see what you did. Paul says that was very much a termination. The market goes up. The momentum is good. He takes a pullback to support inside of favorable large triggers, makes profits, and holding for the second. He says the second divergence will take me out. Paul, nice trade. Steve Diego, everything says up. You get in at the mid band on the wrong side of the smalls. Close on the correct side of the smalls gives you the same entry, and that thing just rails. Nice job, dude. Nice trade, Steve. Not a high probability, right? We're on the wrong side of the triggers. But everything about your chart says support's likely to hold, and you capitalize. Nicely done. I like it when he does that. I'll get through it. I'm going to click on all of his too. When John hits his goals at 10 in the morning, he comes in and distracts me. He thinks it's fun. He says, hey, everybody, don't listen to Mark anymore. Check me out. So we put him on a box and let him dance, and it's a lot of fun. He's about to smart off right at the bottom. Siblings. Can you guys tell that we're siblings? I know you are. But you trump me every time. All right, Chef, strong top. Odds favorable. No clear path. So you're saying everything's in the way. I'm going to try and trade directly into it with all this momentum from a strong top. The termination condition should have kept me out of this trade. You took this trade because we were discussing strong tops and bottoms. You saw the momentum with a pullback to the mid-band. Yeah, that was your large chart mid-band, not your small chart mid-band. That's okay. It's very profitable. The right concept for execution because I don't think so. So, Chef, strong top, best momentum ever. You don't have a clear path, right? There's your mid-band right there at the triggers. That's your potential entry right here. This is the 13.2 mid-band. That's not an area inside of triggers. You could have given yourself even a little extra running room down there. I had to take that off of mine. It was just distracting me. There's your small chart mid-band right at the triggers. If you're going to try this trade in determination conditions because of the strong top, that's your pop back right there. That actually corresponds with the pullback to the super strong triggers here. And that gives you just a little bit of giddy up to get back down there. I don't disagree with the trade because of the strong top. The strong top creates some advantages, and then the correct entries give you the opportunity to capitalize even on these lower probability trades. I think that you did that one just about as well as you could have. The one thing I always ask people, though, is where was your stop if you got in here? If your second correction point was all the way up here, where did you put your stop? Like, how much were you willing to lose on that one? Was it an arbitrary number that was maybe just right here? And that's all I ask people. And you don't even have to answer. But anytime you're going to take a trade, guys, and you're going to break rules, you got to know where your stops are going to be. How much are you willing it? So you put it right between the correction zones. So you had $100 profit potential to get back, and you had 250 risk into the termination condition. Those are the things that you'll start thinking about when the adrenaline's not there. I'm a big fan, especially if I get divergence right from the fib. For me, this is a no short trade scenario. If there were no divergence there, I might be more inclined to give it a try. But divergence right from a fib can ruin a party quick. Like really quick. All right, Kenan. Open. All right, Kenan. So let's talk about the rules for a strong top. Yeah, absolutely. And then, Chef, let me go through this one, and then I'll show you how to get rid of that if you want to. All right, so do you guys remember the rules? Kenan, are you with me? In order for it to be a strong top or bottom, right now it's just a termination, right? All it is a termination. It says no more long trades. In order for it to be a strong top, it has to reverse the market. In order for it to be a strong top or bottom, there has to be a reversal as well. So what we have here is just a termination. And then that termination, should it decide to reverse the market, is going to give you what we call a strong top. And that strong top is going to be rock solid until it trades into another termination. And I think that's what happened with this one. Does that make sense, Kenan? So that one was just a no more longs, not necessarily a short. And then Morgan, you're still going below when they're a full bar away. I like that you did it twice, though. You're consistent. It's a 50-50 trade with divergence. When you hit your area, small triggers were a full bar away, Morgan. I'm going at the area. Or at least waiting, take the reversal bar. But that gap to the small triggers creates an advantage, makes it easier to grab hold. Does that make sense? And if you go through the NASDAQ section here, under client trades, well, where are your triggers, right? That's what and that's why I'm saying the NASDAQ's not as easy. The NASDAQ, you have to be quick. The NASDAQ, you've got to be on your game. And it's on the wrong side, but the small triggers are a full bar away. So you've got to start thinking in terms of NASDAQ entries. No worries. So what I'm doing, man, when this is happening, if I'm saying this is my area, right? I'm saying it's a 50-50, it's strong, it's coming from a good top. I'm not getting in at these areas because I don't even have a reversal bar. Does that make sense so far? I've got my finger on the trigger to sell the market, or I've got my limit order right here. I usually just have my finger on the trigger, and when I get within a tick of that area, if these small triggers are below the reversal bar, I hit sell. And if these small triggers are above the reversal bar marker, I sit on my hands and I wait. And it takes timing on the NASDAQ. Use the sell stop market, and I don't disagree with that. But the challenge is, Morgan, is that the entry was up here with this look. And that's what I'm saying, is that is 7 points. That's $140 difference, right? Now, if these small triggers were coming up against it, well, then it makes sense. Then you put your stop entry at the reversal bar marker on the correct side of the small triggers. See if I can find an example. Did we just turn the lights on? So if you're waiting for it, right, and the small triggers are right there, your stop order's right there at the close on the correct side. And then it just zing, bang, boom. You're not fighting that immediate momentum. But you didn't have any immediate momentum against you. Good stuff, dude. And NASDAQ takes a little bit. It really does. It takes a little bit to get comfortable with what you're looking at. And because it moves so fast, it takes a minute to get your timing in and to feel comfortable with it. And then John Novak gets in on the 50-50, gets out of trouble. I mean, you could teach a class on that, right? And what did his entry look like? There's his trend trade. And it just keeps going all the way to the top. After a good bottom. And then Paul, termination to termination. Everything rolls on the 50-50. He takes the momentum style trade. Because it's nothing more than a momentum break, he's got virtually no risk on the trade. Paul, I like that one. That's a good look. I hope it worked out for you. And then John, weak triggers directly into fibs. And then there's the entry. Do you see how he waits for the close on the correct side, Morgan? Because it's coming down against it. That was his entry. And his exit was right where the market should go. Nice trade, John Novak. Ugh, it's so weird when I have to compliment him in the room. But guys, everything that I know, everything that I teach you about chart reads is just me talking about what John Novak has taught me over the last 4 years. So, all right, John, no triggers through termination. Excuse me. Large triggers roll, pull back to an HVA line right at strong small triggers. Guys, this is the HVA trade. So Jeffrey Dean, when you think it might reverse, termination condition, no triggers through, your small chart will make that reversal, and eventually you'll be able to use a range chart to take advantage of it. That's picture perfect HVA. Nice one, John Novak. And then, Paul, you got your first target and you're not willing to lose. Let me know how that one went. About up to 62, it looks like. And then John tried the first one, it didn't work, tried the second one. I like that John reminds us that everybody takes losers. It's just a part of it. All right, Kenan, there's no such thing as a possible trade, Jonathan. Is it rules met or not? Let's go with that. Is this favorable momentum down? Smalls below the large, larger wide? Absolutely it is. Was this you? Who was this? Kenan? So when price trades above the mid-band will be green. It has the potential to act as support. When price trades below the mid-band turns magenta. It has the potential to act as resistance. When price reaches a mid-band and your large triggers remain a full bar away, this is textbook for when mid-band is the termination condition. So it can still be green. Let me go to the tops and bottoms section real quick. When you talk about termination conditions, that's the last one on the list, is a large chart mid-band if the large triggers are a full bar away. So it's green. The color doesn't affect us so much. It's really just kind of a reflection of where price is. But because price reached it and the triggers are a full bar away, the mid-band's a termination. Because the small triggers still haven't gotten through this area, this is still a termination. And because the large are above everything, you have 1, 2, 3, 4 areas that only have the potential to break but haven't broken. But that color is just a reflection of price and where it's trading in comparison to the mid-band. Good stuff. All right, Jen, let's see what we have. Good top, termination. You finally have kept an eye on his triggers. So you didn't get pulled into the short, Jen, is what you're saying? No short because these were acting as terminations. Nice job. It's nice when I say the lesson and then you come back in and say it kept me out of a loser. Telling you guys, the way to make money is to not lose money when the rules aren't met. The way to have a high P&L is to not give it away when the rules aren't met. And you just got to learn the rules. Made the turn right at the mid-band with the large triggers a full bar away. So Kenan, that's kind of the second one, right? You did have odds favorable, but without the clear path, sure enough, that market went up. And it's piecing these little individuals to create an overall look. Strong bottom, odds favorable, potential to break, one divergence, right to support inside of favorable large triggers. Nice pullback, not 50-50 due to divergence. Jonathan, if you say no trade because divergence printed, that's awesome. Great plan. And this kind of goes back to what we were talking to Adriana about. If I have a strong bottom and this much momentum with the potential to break, I may take one shot with one divergence and just manage it aggressively. So depending on your plan, this was either an absolutely no trade because of divergence, or it was I'm willing to take a shot at it because of the strong bottom. And your plan will determine what that is for you. All right, Chris H, termination, small, large up, smalls down. You jump in and get out of trouble. All right. I don't have rules for it, Chris. Can you replicate it over and over? That would be the only thing. My large triggers are still up, which lends to this, right? It doesn't bounce off a divergence. Divergence doesn't happen till 3 up. So what we're looking at is you don't have momentum up or down yet. Yeah, Jonathan, that's my plan says take and manage. This is a tough look. Because it's NASDAQ, Chris, pink 1-to-1s are definitely a termination condition. So you're just kind of jumping in right off of the termination with the large up and hoping it goes. And as long as you're on the left side of these small triggers, it's going to keep going. It's an interesting approach. I don't have rules for it. Doesn't mean that it can't be a trade someday, but I don't have rules for it. And then odds favorable, potential to break, divergence prints again, and it's coming through. I wonder how many times we're going to see that today. And then Paul, there was your momentum trade, and it made it all the way up to the fib. I don't know where you got out, but that's a very nice trade. Oh, Paul Flowers, you asked earlier, and we just saw one. Price reached the divergence high. Do you guys remember when I described it as a line in the sand where the sellers said, you know what? We're going to push you back down? To the tick, ladies and gentlemen. This is how you develop trust in those divergence highs and lows. To the absolute tick, and it stopped the market in its tracks. And then, Chris, this is kind of your look, brother. It pulls all the way back to support. None of the triggers break, and the large triggers continue up. I don't know that there was a trade in there, but these triggers suggest that we may get another push. And none of these areas are broken. That's kind of a wild look. And if you tighten it up a little bit, you can see exactly where they're fighting. Guys, we made it through all your pictures. But the indecision for me, Chris, and let me show you why I say that. When everything is screaming in the direction of the trade, that's the direction I want to go, right? They're telling me that it's up, everything's going that direction. If I look at my large chart and I'm like, oh shoot, I've got green, I've got red, I've got no clear path, I've got no clear path. I'm a big fan of just saying, man, let me sit on my hands for a minute. Let me wait for it to be better than this. My money's worth it. My money's worth it. Does that make sense? Because there's a big difference between the read. The read is support, and these large triggers suggest that it may continue up, right? But the rules say that I don't have a trade yet. And you've got to be able to find the difference between the two. Jen, this was 50-50. Well, it's even close to a clear path, though. If you're trading the very basic... hey, Steve, have a good one, man. I hope everything's okay at the hospital. So, Jen, which one were we talking to about? This one right here? I just want to make sure. This one? Technically, we're at the tail end of momentum. Would you agree? It's not odds favorable, but it's still momentum. The scissors are closing. You have a clear path. Smalls, large, everything is above. You have one spot where this market is most likely to continue. Let me take a picture real quick. No, you don't get it yet. I'm not done. Don't cut me off, Jen. So everybody in the room, I want you to work with me here. Did we have momentum? Were the smalls outside of the large? Everybody jump in. Help me. I'm telling you, if you start answering these questions, it becomes easier. Absolutely. Did I have a clear path? Were my small and large above resistance? Okay. Hold on. Let's use the language, ladies and gentlemen. Did I have a pullback or a pullback to an area inside of triggers? What do you guys think? Was rule number 3 met? Yes. So what went wrong? Was it the divergence? What do you guys think? Was it that the small triggers rolled? Okay. So Jen, if I have a high probability trend trade, how many divergences does it take to kill my good time? If I have a 50-50 trade, how many divergences does it take to kill my good time? 1. So understanding the difference, right? And this is what you're going to do. No, Jonathan, no. Absolutely not. 1 divergence on a high probability look. 1 divergence on a high probability look in a perfect world is what it takes to get me back to my perfect entry, guys. And this is why you have to know what you're getting into. All right. So we had odds favorable. We had a clear path. We only had 1 divergence. We had areas inside of favorable large triggers. Hold on. I'm going to tell you guys why. Do I have any math majors in here? Guys, anything that wins 70 to 80% of the time has to lose 20 to 30% of the time. John Novak, you majored in registration and rarely got much further. Guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Yep. Even when it's perfect, guys, even when it's beautiful, even when it's amazing, if you don't know your rules, this becomes pretty upsetting, right, Jen? Well, why did it hit my stop? I had momentum and I had a clear path. And guys, your brain is going to try to convince you that you deserve to win this trade. This is a pattern that wins more than it loses. This isn't a pattern that wins 100% of the time. I'm not sure there is such thing as a pattern that wins 100% of the time. Large chart was beautiful. Small chart was beautiful. But Jen, if you got in at the area inside of favorable large triggers at 46, we'll say, your stop was right here at 39 or 40. So you take a tiny little loss on a trade that doesn't work. But guys, if you don't know, if you don't know your rules, if you thought this was a 50-50, if you thought this was a 50-50, the divergence keeps you out. And then John just kind of reiterated, this isn't one that you lose a lot on. Green area inside of triggers, that was the 50-50, right? From a good bottom, 1 divergence. And then this is a clear path, but you know exactly where it should continue. And when it closes below the synthetic trigs, you get out. Beautiful. But you have to know the difference. And guys, if you're a brand new user, this 50-50 may not be your trade. John, I don't know what you're talking about. Small triggers above, large triggers below. Big red fib. You don't have to call it a 50-50, but if you're a brand new user, that's a 50-50 look. Textbook, 100%. Because 50% of my triggers are above and 50% of my triggers are below. So what John just did, and John, thank you for doing that. What John said is, look at this. This is a 100% clear path, right? And if price pulls back to support, isn't support likely to stop the market? Does that make sense, everybody? This is what happens when you can read indicators fast, guys. Because while all of us are saying this is a 50-50, John Novak says there's no way I'd ever trade short because every trigger's above it. Which adds fuel to the idea that this pullback to the support right there at the synthetic triggers, right at this line, is more likely to go up with this momentum than it is to fail because of one divergence. That's how plans grow. But guys, I've been talking about it for 3 minutes, and I never once looked at the trigger position here, because as a brand new user, I have to look at the trigger position here. So John, that's actually some brilliant stuff going next level. Thank you for that. And guys, I wasn't there. My brain wasn't there because my brain is focused on teaching the absolute highest chance of success. And then once, and like I said, once you're a chart reader, guys, you're going to be floored at how many opportunities there are to make money in the market. And then Jen, all they wanted to do is push a little lower, right? All they wanted to do is push a little lower. A-holes. Amen. Did I, Pete? I'm sorry. Let me find it. You know I did it on purpose, right? I always single one of you out just to skip you. Not really. Let's see what we have. Didn't take this trade in sim, but took it in your prop account. Triggers up, strong, odds favorable, not a clear path. Nice pull back to the mid band inside of triggers, able to put your stop 4 ticks away. So we just walked through the whole thing, right, Pete? Because of the strong bottom, because of the momentum, because of the potential to break, because all the triggers are above the support, beautiful. It's a beautiful trade. And then what John just said, because sometimes they're a-holes, right? You could try it again because of this look with the reversal bar, a little bit of confirmation. Yeah, Pete, you killed that one, brother. Nice job. If you were so inclined, because you know it's odds favorable, because you know it's a clear path, because you know it's an area that's likely to hold. Jen, if you felt like you wanted to take it with the reversal bar, you certainly could. But let me ask you guys now, if divergence doesn't print, I still have odds favorable, I still have a clear path, and I still have an area inside of triggers, don't I? So I might be waiting to see if divergence prints, but right now, I feel like this fits the rules. Sorry, is that loud? My bad. Let me open up my volume mixer. Sorry about that. Oh, yeah. My Ninja Trader's up full speed. Sorry about that, Chef. But does that make sense, guys? I still have odds favorable. I still have a clear path. My smalls have rolled, my synth are up, I'm above the areas, everything says up. There might be a second opportunity to take this trade because it's still rules-based. Does that make sense? Just because one doesn't work doesn't mean that it's the end of the road, guys. Just because one entry doesn't follow through, there still may be a shot there. There still may be a trade to have. Let me see if I can find the picture real quick. Hold on one second. I'm going to beat my brother to it. If you take the trade and you have to manage out when everything rolls, if the large chart's still good, guys, there still may be another trade. If you take the trade and you have to manage out, if the large chart's still good, there still may be another trade. Print it and laminate it. One line is, right, Pete? I don't know if laminating is a thing anymore. One line's in. I'm at the tail end of momentum. I do have a Oh, nothing's too big to tattoo, Jen. We can go shoulder to shoulder. I'm not missing anything. I'm looking at it right here. Show me a picture of yours, Pete. What market are you looking at? I'm on crude oil. All right. What time zone are you in, Pete? How many days back are you? What kind of data? There's factors that go in. So you're 3 hours behind me. You and I have a very different midnight, Pete. So there's factors that come in. I have to trade my chart. You have to trade your chart. My chart says I still have momentum. My chart still says that the path is clear. And my chart says that there's a mid band, just hoping that they pull back and hit it. And then win, lose, or draw, that's my trade. If this turns into divergence, well, then I have to rethink it because it's a second lower divergence. So good stuff. Good class today, guys. Great questions today. And look at that. S&P is just dancing around a fib, guys. If you don't think these are where decisions are made, your small chart will remind you that they can't figure out what the hell they're doing. And John's going to come in here and teach you how to break your rules, guys. Once you know your rules like a scholar, you can break them like an artist. But the stop isn't 12 ticks, right? It's where the market should not go. John Novak. You wrote that. You took those pictures. So it's easy to say after the fact, right? If I just would have broke my rules, I could still be in this trade. If I just would have broken my rules, I could have gotten paid. If I just would have broken my rules, good things would have happened to me. But the reality is the rules are based on 1,000 instances, not the one instance. And that's the point I'm sure John was trying to make. Yeah, Pete, you also have a giant ugly fib there. So we're working on a completely different look. Are you sure it's my data that needs to be reset? So yeah, man, it happens, Pete. Yours says no trades at all, right? But my timestamp says 11:24. And yours says what, 8:24 right now? 9:24? I always get thrown off on that. $8:38, yeah. So you and I have very different midnights, which means that when the hey John, have a good one. It means that when you open up your software, Pete, and I open up my software, and then Jen's the same way in the UK, is it runs 10 days back, and it does. He never annoys me, Jen. He makes me smarter every day. I like to give him grief because he used to come in here at the beginning of a 101 class and post the most aggressive counter trend trades ever, and my whole class would hemorrhage. Now he shows up at the end and talks through everything he does. And gosh, his chart reads are unbelievable. He teaches me every day. But you got to have that basic in place. So Pete, 10 days back, and if you have the same midnight as me in Eastern, it's measuring all the same swings. If your midnight's 3 hours behind mine, there's a lot of calculations that go into it that aren't the same. And that's what creates those discrepancies. My rules say that I can get in right here, but if it turns into a second divergence, I have to exit anyway. So I'm going to wait and see if I get a little divergence or I can just get in. You got to make those decisions, guys. I think that's it. We made it to the end. Good stuff. Good stuff. A lot of chart reading today. Remember, guys, if you want to keep it easy, if you want to get there sooner than later, talk to yourself in terms of advantages. Talk to yourself in terms of momentum and a clear path, and you'll find all the entries you could ever hope for. And understand, just like John showed, the better you get with the reads, the more opportunities you're going to find. You made 40 picks today? I've probably made about 25. And that's true. If you do the same, you will do better. So, guys, that's it for me. Awesome day. I'm going to go and I'm going to get you guys today's recording on YouTube. I'll